Okay. Hello, all participants. I'm extremely sorry.
So,
Extremely sorry. Yeah, got late. So, how many? Everyone has joined? Indu and Sanjay, very good morning to you.
good morning.
So,
Good
Kavya,
evening, basically, for you.
yeah,
You
for us,
guys.
good evening. Yeah. So, we have
Yeah.
Kavya, Lohit, Sumantha, Sandhya,
Hello.
Mohit also with us, this class scheduler, Sarthak, Payal.
Good
But
evening.
you are appearing in two places. How come?
Ma'am, I don't know, ma'am. It is showing two.
Okay. So she is double alert. Yeah.
Yes.
So very good morning to the rest of the participants from India. Okay, so I'm hoping that nobody else is joining us today. One, two, three, four, five, six, seven. We have eight participants. Okay, so who is not there? I'm not really sure if I'm missing somebody's name. Rajiv has not joined. Okay, so perhaps he will. Okay.
And also Sneha.
Sneha is also not there, huh? Yeah, so they will join us. I think shortly they will join us. So, all right, now all of you are aware of your teams and your teammates, right? So I understand that because yesterday was our very first class, it was, I know we had not covered really much. So it didn't make any sense that you talk to your teammates. But please, going forward, at least, on a daily basis, try to put one message. You can make your own small groups, WhatsApp groups with your teammates, because this team is, as I think I said this yesterday also, this is going to remain with you forever, which means that lifetime you can provide support to each other during these classes, at the time of writing your exams, and already done. Oh, really? Very nice, Kavya. Very nice. So Kavya says that he has already made that small group, okay, with his teammates. Team B is also done. This is what Payal is confirming. Very nice. I understand my participants are really smart, more experienced than I am. So, but on a daily basis, try to put at least a couple of messages, exchange with each other what you have covered, what you have not covered, what you're finding difficult. Or, the reason is because if you do this on a regular basis with each other, you are in touch with what you have done and then what the other participant is also doing. So that also gives you kind of a motivation to do more and more if you have covered less. And also, it helps me track better the performance of my participants, because it becomes a bit difficult for me to do this tracking for every single participant on a daily basis. Yet it has to be done on a regular basis, at least till the time you clear your CPA exam. It is a must. Okay. So this is really important, and you'll realize that, this thing is paying. Uh, After you are done writing your FAR exam, you will realize the importance of it. Okay. And I'm not saying that you have to spend a lot of time chatting and discussing with each other, monitoring each other's progress. No, this is not what the idea is. You should not end up wasting time because of this. Okay. This is for time saving and for keeping you motivated all the time. Uh, all right. So, Sandhya, I'm very happy that you have joined us at this time, because Sandhya was working yesterday and she was not able to join because of her office. So, I'm really happy that, this for her, Sunday suits her more. Okay. So, in terms of now, starting with where we left yesterday, any issues with the portion that we have covered yesterday? Any doubts so far?
Hedge accounting is not that much clear to me.
Yeah, because hedge accounting is a complex topic and it is not covered in your FAR. So, wherever it is needed, that portion I will tell you. But
Okay.
right now, yeah, it is not needed in that great detail. It is a very
Oh.
complex topic, but I
Mhm.
will cover it. The reason being that, when I was writing my exam, so there was no question from derivative accounting. Hedge accounting is basically nothing but derivative accounting. Okay. So,
Okay.
when I took my exam, there was no question from derivative accounting or hedge accounting in my FAR exam. But when I was writing my audit exam, there was a straight derivative journal entry asked in the task-based simulation. So which
Okay.
consumed a lot of time of mine. So
Mhm.
whatever you are studying here does not mean that it is ending here.
Mhm.
Okay, I am going in that great detail in FAR also. Portion which is covered to some extent in BAR will be taught here in FAR. The reason being because we have to prepare ourselves for the next audit exam also. Okay.
Okay.
So in audit, you can expect very well good amount of journal entries being asked in the
Mhm.
task-based simulation.
Mhm.
So that's why derivative accounting I'm going to cover, but right now is not the right time to do it. So whatever
Okay.
little bit of information was needed that I have given,
Mhm.
I understand that with example it has to be covered, but later.
Okay. Thank you.
Yeah. Sanjay, anything?
Bhavana, yesterday, I reviewed the course and then cleared like some doubts. But the only doubt, like sometimes it happens, like when you are studying, you are mixing like two things up. So
Right.
earlier, I went through the foreign exchange gain, I believe, right?
Right.
Give me 1 minute. Yeah, so foreign currency transactional gains and losses, which goes to like a multi-step income statement.
Right.
And then there is like a foreign currency translation. So I got a little confused between like those two.
Yeah.
But
So that
then
portion
like,
we have to
yeah,
cover today.
okay,
The
okay.
difference between the two is covered in good detail. So in the LMS, the resource part, the book itself. So it contains multiple choice questions on the foreign currency transaction adjustments. So which means
Okay.
where the gains and losses relating to your normal operations that are happening between the local currency and the foreign currency, how that need to be adjusted, that foreign exchange. It goes straight in the income statement as you have correctly mentioned. So, but we are going
Okay.
to cover that portion today.
And one more question regarding you have asked us to prepare the income statement, right, based on the trial balance given. And
Sorry?
I did that. You have asked us to prepare the income statement, right?
Huh.
Based on the trial balance, a
Correct.
question like in your
Correct.
LMS.
Right.
So I did that also, but then again, there was one confusion regarding the rental income. So rental income there was like shown in not operating, but it was
I
shown
will
as
cover
in
that part
operating.
today.
So I was like
I will
little
cover that. Yes. Yes, Sanjay,
okay,
don't
okay,
worry. We are yet to do
okay.
that. So
Uh-huh.
basically the pic that I've just shared in the group. I'm not sure if you have
Okay.
seen that. So it is
Mhm.
basically about that part only. So
Okay, okay,
understanding the difference between the operating business activities and the non-operating business activities, understanding the difference between gross presentation and net presentation. Okay, so
okay,
it very well relates to that part. That is my agenda today. We have to cover that. Yeah, so
okay.
both
Thank you.
things that you have mentioned, foreign currency transaction adjustments, and also the operating and non-operating, the adjustment or presentation of the rental income in the top line item of income statement will be covered today.
Okay, okay. Thank you.
Yeah. Anything else? Sandhya,
No, ma'am.
did you go through?
Yes, ma'am.
Okay. So you can let me know. You see here also, I encourage more questions being asked there because I think my formula is very clear. More questions asked there, less mistakes on exam. Okay, so it is inversely proportional. Less questions asked there, more mistakes on exam. So
Okay,
all
ma'am.
of you, please bear this on mind. No hesitation at all. Nobody is a champion here. Nobody is judging you. And the best part of an online class that I feel is nobody is seeing each other. So it is okay, right? All we can see is your names.
Yes,
So why
ma'am.
hesitate? All right. So if there are disadvantages of an online class, this is, I feel, is the biggest advantage. All right. So, yes, Kavya, Sarthak, Payal, Lohit, and Sumanta, any questions?
No, ma'am.
No, ma'am.
No, ma'am.
Sumanta,
Yeah,
you
regarding the
have to ask
foreign,
me at least one question today.
yeah, I am in accord with Sanjay regarding the foreign currency translation and transaction.
Hmm.
Bit
I will
confusion
talk
is
about
there.
it.
And one more thing is regarding it is the administrative part, that is whether videos will be uploaded in LMS.
Uh-huh.
Videos will be uploaded in LMS later.
I did not understand what you are asking.
Whether the video would be uploaded in LMS
I think he's asking
What?
about the recording of the classes.
recording.
Recording. Yeah, so
Yeah.
recording we will upload in the LMS. See, what's happening is we are sharing anyway with you on your emails. The reason we are not uploading is because there are few participants who are just joining us for demo sessions right now.
Okay.
Okay. So let it get over. I think couple of classes and then we will upload it in the LMS also. You will find all the recordings in the LMS.
Yeah, then it will be easy to locate those things. Otherwise, it will be in scattered.
It will be.
Yeah.
Yeah, it will be there. The recordings will be
Okay.
there.
Okay, fine.
So,
No
yeah,
more
couple of
part.
classes and we will upload everything. But anyway, you will have access immediately after the class. Yesterday also Mohit has uploaded. He has sent, right? So likewise, today also we are going to do that.
Okay.
Okay. Okay, so can we start where we left yesterday?
Yes.
Okay. So yesterday we actually have covered few pages, but it was not in that same order which is given in the LMS, right? So you might just feel that, we have just covered one page. Actually, we have covered many pages yesterday. Okay. So, but in any case, I'm not going to pace up until you all tell me that, ma'am, please pace up. Okay. You all can see my screen?
Yes.
LMS is, yeah, visible?
Yeah.
Okay. Now, Sandhya, at least today you have to ask questions. Okay. No questions asked is not a good sign.
Yes, ma'am.
Yeah, because yesterday I understand that your interaction was not possible. And please don't think that I'm, unnecessarily involving you. No, it should be actually from your side. Okay. So,
Yes, ma'am.
yeah, the whole intention is that we have to make it a good, lively session, right?
Yeah, ma'am.
Also, one more thing, I might need to wind up the session today a little bit early, like around 8:30, 8:45. My mother-in-law is very serious. Okay, so that's why I think today is a very critical day for our family. So I might need to wind up a little early if needed. So by 8:30 or so, I will let you know. Okay.
Okay.
So here till
And
here we
one
sorry.
further question: in between, will there be any break in between?
Do you need a break?
Yeah, in between.
Okay. So whenever you want a break, Sumanta, please let me know.
Sure.
Okay. We can take a break for about 15 minutes or 20 minutes, whatever time you all need. Okay. I can also take that break then. Let me know. So this is what we had covered yesterday. So we started off with the balance sheet. All right. And every single line item which is mentioned here, we have to understand the valuation of it. The presentation of it is here on the balance sheet, but the values, okay, the measurement part of it, that has to be covered. That we will do step by step as we progress further. Okay, so here I've only given you a high level idea about the line items that are mentioned here. Now everywhere you will find memory aids, but this is only for you to quickly look at it. Okay, this is a very important definition. I told you, you will get definitely at least a couple of questions from this equation. So you don't have to learn it by heart, understand it logically, what this equation means and the various permutation combinations that are possible. Okay, with this equation. Now, what are current, non-current assets? We have discussed, and for your revision, it has been mentioned here also. Okay, so this is for the general purpose reporting, that so many different financial statements will be required to be attached. Okay, one by one we will do each. So we are starting with the balance sheet. A good portion of the balance sheet we have already covered yesterday. What you see underneath this is accounting standard codification, ASC 210. Okay, and we have to prepare the research work for this accounting standard codification, because good 5-mark question will be there on this research. So every single chapter that we are doing, you only remember that what is the keyword for the concept that we are covering. That you will understand yourself. Okay, I cannot teach you that. You will understand yourself. More and more you read, the better you become in your research work. Research work basically means that you save time. Okay, type in the correct keyword in the first time and just get the right answer. Okay, so balance sheet. Then the interconnected statements with the balance sheet are the income statement, the shareholders' equity, cash flow, and the comprehensive income. Cash flow out of these 5 statements will be covered only in the later part of our sessions. Okay, not today. It will be after many weeks that we will cover cash flow statement. Now, here is the key relationship which I have discussed already yesterday, that the net income, okay, or loss from the income statement flows to retained earning, while the OCI, which is other comprehensive income, and the final amount of it goes to AOCI, which is nothing but your accumulated other comprehensive income, which is also part of your equity. So retained earning and equity, these are both 2 sections of the same part on the balance sheet. Okay, so we make a separate schedule for this, or a separate statement for this. That separate statement is called shareholders equity statement, okay, which is mentioned here, 215 codification. Then what we get, cash from the balance sheet should reconcile with the cash flow statement. Okay, so this we will cover later, how this reconciliation takes place. Then notes that require detailed disclosure about every single line item which is present in these statements, which also covers in detail the accounting policies of the entity. Okay, so the notes, I can tell you that, you know, what is given in the LMS, just go through those 2-3 pages, but you will not remember it. Okay, so what we will do, we will pick up some annual report of an entity. Like, say, for example, we can pick up, as I told you, Uber is very detailed. Okay, or we can even pick up Coca-Cola, because Coca-Cola's example we have taken to understand other comprehensive income and the 2-statement approach which is used here. So likewise, we will pick up to understand these notes quickly. Okay, in which item number is mentioned what, basically that you need to remember. In notes, what is most important is the management discussion and analysis section. Okay, so where the management basically discusses, it talks about the business and, you know, the progress and the changes that have happened during the entire period. So this we will do, refer to some good annual report and try to understand this. But that also will not happen in today's session. Okay, next Saturday we have planned for this. Now, in the equity section, if you go back to the balance sheet, you know, if you go back to the balance sheet, this equity section, okay? This equity section, which consists of the capital stock. So the first line item mentioned here is preferred stock. Now, I told you yesterday that there is 7% cumulative, non-participating. This is nothing but the details of the preference capital stock, which has been issued by the entity. Not necessarily that this is the only type of preference stock that an entity may issue. The entity may issue many different types of preference stocks, and all that should be mentioned as a line item on your balance sheet. Now, here we are going to cover each of the different types of preference stocks that a company may issue. What is the meaning of it? You don't have to really get into the details of it, but yes, wherever the valuation is needed, that will be covered, but not today. Valuation, as and when we reach to that part, we will cover the valuation part also, or the carrying value also. Okay. So the next part of it is the common stock. So I told you that common stock also, depending on the different differential voting rights, or if any different terms are incorporated, the common stocks may be of different classes. So each of those different classes need to be mentioned here, right? And at the bottom is given the treasury stock. So whatever is the difference between the total number of stock issued minus the shares that are outstanding to the unrelated parties outside. So all of that is reduced. The balance is your treasury stock here. The valuation part of it is covered in module 3 and 4. So let's go back to the equity part of it. Now here it covers common stock, which has the voting rights. Common stock means the equity stock. They are the real owners of the entity. So the major decisions, at times it is mentioned very clearly that the major decisions of the entity have to be made with the consent of the equity shareholders. So most of the times, equity shareholders, they participate in the decision-making process along with the senior management of the entity. What do the preference stock do then? Why are they even called as the stockholders of the entity? Because they have also invested their money, but they are more interested in dividends. It's kind of a balance that they have maintained, that at times they will cast their vote in some of the decision making process, they will be involved, but they are ranked below the equity shareholders in terms of ownership. Okay. And the preference stockholders, if they are holding certain class of shares that may be converted into equity stock at some point of time, they will be separately disclosed in the balance sheet itself. Okay, that this is a separate class that they are holding, which may be converted into equity stock at a certain point of time. All right. So we have to give on the balance sheet what is the capital which is authorized according to what is filed with the as per the documents with the SEC and our documents, internal documents, the memorandum and the articles of the entity. Then what is authorized and issued. Okay, out of whatever is authorized, how many actually have been issued to the outside public. And then whatever has been issued out of this, how many are outstanding. If we have not bought back any shares from what were issued, then the issued and outstanding will remain the same. Okay, so these are the different items or the components that make up equity. There might be a question as a multiple choice question. They can always ask you that in the equity section of the balance sheet, we have capital stock, we have EPIC, we have dash, we have AOCI, we have treasury stock and non-controlling interest. What is missing? So these are the 5-6 line items that you should know. What is a treasury stock? We know. AOCI and retained earning I'm going to cover now. What is a non-controlling interest? Anybody has any idea? What is a non-controlling interest, Sanjay?
So
Are we
non-controlling.
disconnected? Yeah.
No, we are not disconnected.
Yeah.
So a non-controlling interest is where 50%, where the ownership is like less than 50%.
Okay. So what happens this? Yes, you are right. Conceptually, you have that understanding. Right, Sanjay. So what happens is that when you are basically the parent of any entity, right? So at the end of the financial year, you merge your balance sheet with the balance sheet of the other entity, that which is your subsidiary, right? Now of the subsidiary, you are actually holding more than 50% of the stock, right or not? You are the parent of a subsidiary because you are holding more than 50% of the equity stock of that other entity, correct or not, Sanjay?
Yes. Yes.
Right. But then what about the remaining portion of the stock of that subsidiary? That must be held, that means by some other party.
Yes.
Right.
Right. So when I'm merging the parent's balance sheet or the parent's financial statements with the financial statements of the subsidiary, I'm basically treating that this is my company only. But of this company, maybe 45% or 48% or 49% of the shares are held by some other party or not,
Yeah.
Yeah.
right? So if it is held by some other party, I'm basically saying that they are the equity shareholders of my entity, of my family. So my family, if I have to show it, just a minute. So here is the parent. Okay. Here is the subsidiary. Okay. And here is the other party. Now the parent has done what? The parent has taken 51% of the equity of the subsidiary. Okay. So 51% of the shares are held by the parent. How much is remaining? That means 49% is held by the other party. Correct or not? Subsidiary shares.
Yes.
Right.
Now, when this happens, the parent is basically preparing its balance sheet and is saying what? He's preparing a consolidated balance sheet. Now, a consolidated balance sheet is different from a standalone balance sheet. Standalone balance sheet means my own nuclear family balance sheet. While a consolidated balance sheet means parent plus subsidiary joint family balance sheet. Okay, so I'm basically showing the world that this is my family. All right, but is this also my family? This is not my family. So what
No.
I do basically, that whatever are the total number of shares that are held by the parent, that's not shown as an investment in the balance sheet of the consolidated. Here it is not shown as an investment. We strike those equity off because we pass a journal entry saying that these are intercompany transactions. Okay, so when this parent had invested in this subsidiary, the parent had basically debited the investment, right? This is what we do, Kavya. Maybe for $100,000, I had invested, right, Kavya? Kavya, are you not there?
Yes, yes, I am here.
Oh, then please be loud enough. So this was the entry that I had passed only at the beginning when the parent had purchased those shares in the subsidiary. Let's say, for example, for $100,000, right? But what happens when I'm merging the results? I will not show this as a separate investment because it is not an investment anymore. It is like my own company. So how can I invest in my own self? Can you invest in your own company? Can you buy your
No,
own shares and show that as an investment?
no.
So you
No.
do what? You basically pass a reversal entry. You say this is the actual entry will be discussed only later because this is an intercompany transaction. Okay. But you pass a reversal entry and this investment is credited. So when this investment gets credited, that means you are knocking this investment off. You will not show it as your investment.
Right.
Okay. But don't you think that in the subsidiary's balance sheet, the subsidiary will still show under the head equity capital two things. One held by ABC, which is the parent company,
Parent.
and another by, let's say, XYZ, which is the other company, holding 49% of the shares. This is holding 51% of the shares. So this, when I'm merging, I'm knocking it off. But what about this? This will still go in the balance sheet somewhere, right or not? So in a way, you are showing that this party is my equity shareholder.
Yes.
You are saying that I have issued shares to this XYZ. How much? 49% of the shares that were held by it from the subsidiary. Now, whatever is the value, that value would be written here. This in India is called as minority share. While in US, they call it, what do they call it in US?
Non-controlling interest.
Non-controlling.
Non-controlling interest or NCI.
Mhm.
Which means that this is a party which is not controlling the interest
Hmm.
in the subsidiary. I am knocking off subsidiary's total capital. 151% knocked out completely because I'm merging the results and I cannot show the world that I've invested in myself. So this investment is completely knocked out. If this investment is knocked out, the subsidiaries, rest of the 49%, which has been issued to the other party, that still has to be merged with mine. So any intercompany transaction that happens between the parent and the subsidiary company, if it is an income statement transaction, it is knocked out. That means you pass a reversal entry for the sale, if any sale has happened between the two. So if earlier the sale was credited, at the time of consolidation, you debit that sale. If any investment has happened from one party to another party, between the parent and the subsidiary, you pass a credit entry for that investment, as we have done here. So if the subsidiary also buys some shares in the parent, you pass a reversal entry for that investment also. So no transaction that has happened between the parent and the subsidiary, that transaction will be transferred here at the time of consolidation. Consolidation itself means knocking off the intercompany transactions. And this is the first intercompany transaction that has to be knocked off. But this is not an intercompany transaction. This is outside party. So the parent also treats this party as an outside party, and the parent would treat it as an outside party, just how the subsidiary was treated. So the subsidiary treated this as an equity holder. The parent will also treat this party as an equity holder. We are one family.
Yes.
Sarthak,
Yes. I.
understood?
Yes.
So this is what is called as non-controlling interest. Now in India also, the new accounting standards that are followed in India, we call it non-controlling interest. Earlier, according to the old accounting standards that were applicable and that are still applicable to, okay, who knows that difference between Ind AS and accounting standards? Applicability part. Rajiv is there in the session? Not today?
No. No.
Okay. So, what is the difference between, you all are aware, right? Let me just take 1 minute time. I think this is very important for all of us. Okay. The accounting standards that are applicable. See, I'm not going out of syllabus. Okay. This is really important. One should know this. There are two sets of accounting standards now applicable in India. We all know this accounting standard. This is called Indian accounting standard. The accounting standards that are applicable in India are, now they fall in two categories. This is the old ones. Now, do we not have it? No, we still have it. But this is applicable, or this is only for those companies that are not listed companies. Having a net worth of less than rupees 250 crores. So they still apply this. They still use this. Small companies, these are called now. Okay. Now, what about the Ind AS? So any company which is a listed company, either in India or outside India, or even if it is not a listed company, but has not listed, but has a net worth of more than 250 crores. they have to apply the new set of accounting standards called as Indian accounting standards. This is nothing but the converged IFRS. Converged IFRS means that we have not adopted as it is IFRS. That means according to our economic conditions, most of the points or the rules that are given in IFRS, we agree with that. But according to our economic conditions, we have changed, or there are few carve out, few differences between the Indian accounting standards and IFRSs. So here and there, little bit of difference is there, but largely we agree with all the IFRS, International Financial Reporting Standards. IFRS is mostly in line with US GAAP. So that means you can say that Ind AS now, US GAAP and IFRS, they all are almost same. So if you are learning US GAAP, you get an opportunity to work in a US subsidiary which is located in India, you will actually be applying Ind AS. And if you have understood all of this, then IFRS is what you are learning or what you have learned. Okay, so all of them are related. Here and there are few differences. Like for example, Ind AS and IFRS, financial instruments, completely different from US GAAP. Okay, but so far as revenue recognition is concerned, replica. All of them agree with each other. Here, just one difference is there, but mostly it is same. These are exactly same, so far as revenue recognition is concerned. Like this, there are here and there few differences, but mostly they are same. Okay, so you are learning one thing, that means you are learning the rest of the standards also that are now largely applicable across globe to most of the big companies. Okay, now the logic which is not explained here in the accounting standards is explained here in the Indian accounting standards. So if you have understood this, logically you can understand the old accounting standards also. Okay, so what you are learning is actually important. Now, so we have capital stock. Capital stock means we have common and preferred stock. Let's dig this deeper now. So capital stock may we have common stock. One important definition in common stock is understanding how to calculate the book value. Good multiple choice question can be expected on this. How do you calculate the book value of stocks, common stock? So book value basically of a common stock is the value that a common stockholder would receive for each share if all assets were sold at their carrying value. Okay, carrying value is basically the value which is presented on the balance sheet. Okay, so if any time they say carrying value, always look at the value which is given on the balance sheet. And all creditors were paid. So the formula is common stockholders' equity divided by the common stock or the shares that are outstanding. So that means if they have given issued and also the bought back treasury shares, that need to be reduced to calculate the outstanding shares. Okay, as on that date. We will do multiple choice question on this also. Okay, now the different types of preference stocks that can possibly be issued by an entity. I have not checked with my participants. Are you all in? Everyone with me?
Yes.
Yes, ma'am.
Yes.
Any doubts so far? Any doubts? Payal?
No, ma'am.
Okay. Sarthak?
Yes, I have a doubt.
Yes, please ask me.
Can preference shareholder have a voting right without converting into common stockholders?
No. The voting rights rest with the equity.
Okay, so they would have to convert to common stockholder first, and then they can enjoy the voting right.
Yeah, there are certain conditions that may be at the time of issuance be given. Okay, that in certain conditions or in these cases, the preference stockholders, their opinion may be taken.
Okay.
But the voting rights or the voting stock, so common stock is sometimes also called as voting stock.
Yes.
So because they only have the voting rights. these are the people who get paid last. At the time of liquidation, when we set up the preference that who gets paid first, always the government obligation has to be discharged first. Then the other outside creditors have to be paid first from whatever assets the entity is holding at the time of liquidation. Okay. The outside creditors, once they are paid, then comes the preference stock. And then in this preference stock also, there may be different categories. At the time of liquidation, who gets paid first, who gets paid after the first payment has been done. And if anything remains after that, then comes the equity stock. So preference stock is basically you get preference in terms of payment of dividend over the equity stockholders. You also get preference at the time of liquidation, distribution of assets. Okay. So this
Okay.
is what the main difference is. Now
I have a question.
Yes.
So what is the difference between participating and non-participating preferred stock?
Yeah, so that is in terms of the profit participation. And let me come to that point.
Okay.
Can you
Okay.
explain again the common shares outstanding?
Common shares outstanding means that these are the shares now outstanding or resting with the public outside. So that
Okay,
means
outstanding doesn't mean that which are left with the company which are not sold, right?
no.
read.
Outstanding basically, yeah. So I'll take you back.
Yes,
Do you see this part?
right.
Okay. So common stock. Do you have the
Mhm.
calculator with you?
Yeah,
I think you did it yesterday also.
right.
Reduce from the total number of 58 million shares that have been issued,
Uh-huh.
the total number of shares that are outstanding.
So outstanding
57.178.
in this case, outstanding means this 57,178, right? To calculate the book value of the
Yeah, the difference between 58 million and 57.178 is the treasury stock.
treasury stock. Yes.
Treasury
Okay.
stock means that these are the stock that I have bought back,
Right.
repurchased from the outside public.
Yes. No,
So
these are the
whatever it is-
repurchase. Maybe
Sorry?
you have issued 100,000 shares, but maybe you are not able to sold out all, right?
Yeah, then that's the difference between what is authorized and what is issued. It's not
Right.
the difference then. So basically, difference between issued and outstanding means that these were issued to the public initially. But
Mhm.
then I called back certain number of shares. Now
Mhm.
on this particular date, how much is actually remaining
Okay.
with the
Okay.
outside parties
Clear.
is the outstanding shares.
Okay.
Okay.
Yeah,
So that
got it.
term you will need at the time of your EPS calculation.
Mhm.
All right. So we have cumulative preference stock. Sumanta, what is a cumulative preference stock? Yesterday I had explained. Please, today, will you explain?
Yes. If you have not paid dividend for say 3 years, then 3 years cumulative dividend has to be paid once you are declaring the dividend. So that is cumulative preference.
What
dividend.
about the legal obligation of paying dividends in case of cumulative preference stock?
No such legal obligation. If you declare, then you have to pay.
Why? Why no legal obligation? This is cumulative. Then what is non-cumulative? Is non-cumulative? Yeah. Then what is the difference?
Non-cumulative means suppose you have declared dividend for 3rd year, then you have to pay dividend only for the 3rd year, not for the 1st and 2nd year. So maybe I'm not sure, but maybe cumulative dividend is having a legal obligation.
Sorry?
Cumulative dividend may be having a legal obligation. I'm not sure about it.
A legal obligation since the beginning?
Not since the beginning.
Then
Yes.
end of the year? Say today is January 1, year 1. December 31st?
December 1st,
January 1, year 1, I have issued cumulative preference stock.
Okay.
7% cumulative preference stock. December 31st, my results have been announced. I've made really good profit. Now you are the holder of preference stock of my company. You walk into the company and you say that give me my 7% preference stock. What will I give you?
1 year dividend.
And if I do not give you?
You have declared the dividend, so you are going to
I have
pay.
not declared dividend.
Oh,
I've
no,
only
then
declared results.
no, then there is no obligation.
Then I will give you one candy and I will tell you that
Mhm.
Sumanta, please go back and read the accounting part of it. The legal obligation is not there. Okay?
Yeah,
I
yeah.
still do not have any legal obligation because dividends, even if it is preference stock cumulative,
Mhm.
I do not have a legal obligation to pay you until I declare it.
Yeah.
Yes.
Okay, it has to be declared first. So
Mhm.
once it is declared, then there is a journal entry which is passed, right?
Mhm.
And then what do
Yes.
I do? I debit my income statement, Kavya.
Yes.
I debit my income statement and I credit my dividend payable,
Yeah.
Yes.
right?
Yes. Yes. Correct. Correct.
Correct?
Yes.
All of you heard him?
Yes, yes.
Yes.
Kavya,
I
read
think
this.
it is retained earning debit
One
to
second.
dividend
Let
payable.
Kavya
Oh,
read this.
yes. 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 So, sorry. Yes, it is retained. The
Kavya,
change
please
in
read this. This
the
part.
change in
The
the
change in
change in
equity.
equity net assets of a business entity during a period from transaction and other events and circumstances from non-owner sources. It includes all changes in equity during a period, except those resulting from investments by owners and distributions to owners. Comprehensive income comprises both of the following: A, all components of net income; B, all components of other comprehensive income.
Okay. So this means that the non-owner source transactions are never transferred to comprehensive income. Comprehensive income consists of net income, which is coming from the last line item of my income statement. And it also comprises of the other comprehensive income, which is the total of the second line item, which is coming from the statement of other comprehensive income. But all non-owner sources, okay, what are the owner sources? Owner sources are the investments by owners. That means the equity that we have issued to the people is their investment, okay, in our company, and they are the owners of our company. And the amount that we distribute to the owners, which is in the form of dividends. So these two types of transactions, so payment or the investment which is made by the owner and the dividend which is declared, is not taken either to the net income or to the other comprehensive income. So that means, where do you take this? It has to be taken somewhere. You transfer it directly to the balance sheet, retained earning adjustment. ठीक है ना काव्या? So let's
Yes.
not make this mistake again. You told me this journal entry yesterday correctly. Okay.
Yeah.
So now what is non-cumulative preference stock? Non-cumulative is where your dividends do not get accumulated from one year to another year. But again, there is no legal obligation until it is declared. Once declared, then the entity has to book an entry saying that my dividend is now liable. I am now liable to pay dividend. So I will debit my retained earning and credit my dividend payable on that date. And once the dividend has been paid, then dividend payable is debited and my bank gets credited. Okay. What is participating preference stock? So that means these are the preference stocks that participate with the common stockholders in dividends. That means excess of the profit. Okay. In excess of the specific amount. Now what happens is, like say for example, let me just take you to this slide again. Okay. Now what happens is, let's say 7% is the cumulative or whatever is the dividend that need to be declared on the preference shares. Okay. Now I have paid this amount to the preference shareholders. Okay. But the total amount of profits was 100,000. Now the biggest advantage of equity shareholders is that the preference stockholders, they get paid according to the dividend which is already mentioned on their legal terms. But to the equity stockholders, they are entitled to the rest of the dividends that may be even more than this. In some cases, it can exceed the total amount of the dividend which has been paid to the preference shareholders also. So any excess of the profits that are remaining after the payment of the dividend, which is legally bound to be paid after it is declared, then that much belongs only to the equity shareholders, unless the terms of the preference shares say that they are participating preference shares. So participating preference share means that once the equity shareholders have been also paid, the remaining amount will be then distributed between the equity, and also the preference shareholders can line up again for this. If it is a non-participating preference shares, then any dividend which has been first declared to them, that's all, close. After this, nothing else. But participating, they line up again. Now, we have, I think, in the third and the fourth module, a little bit of understanding in terms of the numbers also, that we can do some examples, but mostly it is now covered under bar. Okay, so these sort of examples in greater detail. But this understanding is important, that they can line up again after the amount has been paid to the equity shareholders, if they are participating. However, in most of the cases, these are non-participating preference stock. And if nothing has been specifically mentioned, then by default, it will be taken as non-participating preference stock only. What are convertible preference stocks, Sarthak?
Convertible preference stock would be the stocks that have the provision of getting converted into common stock after meeting of certain conditions or at a certain rate.
Correct. Do you all agree? So after a certain period of time, these
Yes.
stocks may be converted into equity, and post conversion, then they become the real owners of the entity. Okay, so those are the convertible preference stock. Non-convertible are those preference stocks that cannot be converted into equity at any point of time. What are callable, redeemable preference stock? Anyone? Sneha?
Redeemable are, sorry.
Sneha is there? Sneha is there in class today? No? Sneha has not joined.
No.
Sandhya. Sandhya?
Yes, ma'am.
Yeah. Any idea?
Callable. Yeah,
What is
callable.
callable?
It can be called back by a company, like sort of buyback.
Okay. Redeemable? Indu?
I think anytime you can send back to the company, you can redeem it as it
Can
name.
get it redeemed.
Right.
And redemption basically means?
Redeem means I think the amount you buy it, you can redeem it at the same price.
Okay.
Like I'm not
Company is
clear, but
getting paid for it, right?
right. Yes.
Okay. So underneath, I mentioned here at the option of the issuing corporation. So
Corporation.
that
Yeah.
means any company which has issued. Now, okay,
Mhm.
please remember these terms. Let me just explain these terms in a little bit more detail. So callable basically is a derivative term. Okay. And at times they use these terms. They have used this in revenue recognition also. But understand one thing. So call is the term that we will use for buying. Put is the term, these are derivative terms, okay? But used elsewhere also in accounting, you will come across these terms. Put is for selling. Okay. So anytime there is an instrument that carries this term saying that the issuing corporation has a right to call. Right to call means the corporation has a right to buy back from the from the investor. So if A has invested in stock of ABC Corporation and ABC Corporation has inserted this term that I have a right to buy back these shares from you at a later date. So that means this is called a callable financial instrument or callable equity. When I buy back from you, I am buying it, okay? So it's not that I can just take it for free. I will need to pay some amount for this. You all agree? I'm buying it, so I will pay also to this party. A will bring
Yes.
my own shares, buy back my own shares from you, right? And then ABC will do what? Pay to this investor. So the payment, whatever happens, is called as redemption of shares. Okay, so these are the two terms that we have used there. The shares are callable, redeemable, preference shares. And this is callable at the option of the issuing corporation. So that means the issuing corporation has retained the right to buy back those shares at a later date. Now this not necessarily into that this will be at the same price at which I have sold it. This can be at any price. So this price is also agreed upon between the two parties that I will buy it at a later date, on a later date at this price.
Okay, so
So
it's
this will
decided.
determine the, yes.
Okay.
Okay. So this is agreed upon between the two parties. So that helps us basically deciding whether, this will be a beneficial to ABC or not. If it is beneficial, only then ABC will call. So because if I have a right to call, so that means
Okay.
I have a right to reject it also at a later date if I feel that it is not turning out to be a beneficial transaction for me. Okay. If somebody has a right to put, so that this is called as a puttable right. So this
Okay.
means right to sell. So that means if the investor has a right to sell it back to ABC Corporation, we will say that the investor is holding a puttable instrument. Okay. So these are the terms that are used in case of financial instruments. Put, you remember, means selling, and call and put basically means right to either buy,
Or sell.
it is call, or right to sell is called put.
And the price is
these are
agreed at the
terms-
time of
sorry,
agreement. And the price is finalized, right, in future if they call or they
at
put.
the time of agreement, at the time of giving, selling itself.
Okay.
Yeah. So these are the terms that are used in case of options. Either you have a call option, which means you have a right to buy, or you have a put option, you have a right to sell. Right to buy means that tomorrow, whoever holds this right, whichever party holds this right, if that party finds it beneficial, at a later date, they will exercise their right to buy. If they at a later date, because the price is already fixed, right? At a later date, depending on the market price of the shares, if they decide not to buy, there is nobody in the world who can pressurize them to buy because they are under no obligation. Option means not an obligation. Option is a right. Okay. Now,
So this option is with the company only or with the buyer shareholders as
in
well?
this particular case, this is with the company because this is what we have mentioned, that this is the callable, redeemable option of the entity.
Okay.
Okay. So we have two terms. One is option, another one is forward. Okay. So these are both derivative terms. In options, you will see call option, you will see put option. Okay. So this is a right to buy, remember this? At many times you will come across this during the entire syllabus, okay? Not necessarily in your derivative accounting. And this is a right to sell, okay? And this option is a right. This is not an obligation. That means nobody can force you. But a forward or a future contract is an obligation. That means if you have entered into this kind of a contract with the other party, either to buy the instrument or to sell the instrument, both parties, A and ABC or XYZ, whatever, both are under an obligation to satisfy their commitment. This is an obligation for both. While this is the right of the person who has purchased this call option, or this is the right, put option is the right to sell, which also is purchased by the party. So these are the terms that you should be just aware of, okay? Option means I have a right. If I later want, I can deny this. So callable, redeemable is that I will get paid for this. Preference stock at the option of the issuing corporation. That means the issuing corporation has retained the right to call these shares preference stock and pay them off at that time. Now, mandatorily redeemable preferred stock. Liability. Do you read this? This is actually very interesting. What happens is now they have changed the entire accounting. You will be surprised to see now that in few balance sheets, you will see preference stock, not in the equity stockholders section, but you will see this lined up in the liabilities section. Preference stock. An entity, let's say ABC, ABC Limited has issued preference stock. Okay, whatever are the terms issued. But one term incorporated is that this is mandatorily redeemable preference stock. Now let's break this up. Mandatory. That means I have a legal obligation attached. This basically is a contractual obligation. A contractual obligation. If I do not satisfy this, legal action may be taken against the entity. And what is the contract? The contract is to pay the preference shareholders when they bring back the share to me, because it is a redeemable preference stock. Now in India, according to the new Companies Act, you cannot issue non-redeemable preference stock. So that means in India, mandatorily redeemable preference stock, maximum period for which you can keep the preference stock issued is 20 years in India. Okay, so after 20 years, you necessarily have to redeem it. Mandatorily redeemable preference stock. Okay, now Rajiv is with us, right?
Yes.
Rajiv, are you there?
Yes.
Now you tell me, if I have a contractual obligation to pay you some amount, and if I do not stick to it, you have every right to take legal action against me. Okay?
Yes.
Do you think this becomes my liability, or this is still, as I will treat you as the owner of my entity, or I will just say that you are my friend?
No, it is more like a debt. It is a liability.
It is a liability. So therefore, now the new accounting standards have shifted the presentation of this kind of preference shares from the equity stock to liability side. And they say that no. Look at the terms. You have a contractual obligation to satisfy this. Now this completely depends on, sometimes if it is at the option, if it is not mandatory, but at the option of the issuer or the option of the investor. Now let's break this up once again. If I have the option to not pay you money and instead just keep these shares outstanding, then it is not a liability. Do you all agree? Do you all agree? Kavya, Sarthak,
Yes.
Indu,
Yes,
do you all
ma'am.
agree? If
Yes.
I have an option to either pay you money or to not pay you money and keep you as my shareholder only. So that means it's not a strict liability.
Right.
Because you cannot take a legal action against me. You cannot sue me for this because
Mhm.
it was agreed at the time of the share issuance itself.
Right.
Correct. However, if I give this right to my investor, if you want, I will give you money, I will redeem the shares, or if you want, I will not redeem it. Then don't you
Mhm.
think because it is out of my control, it becomes my liability in strict sense?
Liability.
Because
Mhm.
tomorrow, if you ask for money, I cannot deny. And if I deny, you have every legal right to sue me. So
Right.
that becomes my liability, an obligation. So read the terms very, very carefully. If they give you preference stock, read for the preference stock, because now these are the different financial instruments that are available in the market and they may test you. This is basic concept. Whether you think that there is a mandatorily redeemable preference stock, if it is a mandatorily redeemable preference stock, it definitely is a liability because this is mandatory to be redeemed. Nobody has a right. Nobody will say no because it was initially agreed upon like that. However, if it is at the option, look at
Mhm.
who has the option, whether the issuer has the option or whether the investor has the option.
Mhm.
If the investor has the option, then this definitely is a liability. Because if investor tomorrow wants money, you cannot deny. However, if you have the option, let's assume that we will not pay him money. Instead, our advantage is that, he should keep outstanding, he should be only kept as my preference stockholder.
Preference stockholder.
So in that case, you present it under the category of your equity shares or your equity security. Okay? Is that clear? Have you all understood the logic
Yes.
behind it? So
Yes.
it is not practically possible for me to tell you every single type of preference share that you may see on your exam. Because
Mhm.
now there are so many different types. See, it completely depends on the company and their terms with the investors. They
Right.
may issue any type, but they have to write it down for the world to know that, okay, this is what the basic term of issuance is. On that basis, you will need to take a call on exam that whether it looks like a liability, because you do not have a right to avoid this. If the issuer has a right to avoid this, then definitely this is a preference stock. If anybody else has a right to ask for the money when you cannot deny, then it becomes your liability. Okay, so this is just one example. Now there are many, many that may be issued. I can give you a whole long list of it. Okay, so please remember this. Any confusion in this, Sumanta?
No. No.
No. Okay. Payal, Sarthak?
No, ma'am.
Bhavna, can you explain a little bit more about like cumulative preferred stock?
Cumulative?
Preferred.
Okay. So Sanjay has a doubt, huh? Or Rajiv?
Sanjay.
Sanjay, huh?
Not doubt. Actually, it is like when the dividend is declared, right? Then only it is a part of like cumulative preferred.
Yeah. So you are exactly, yeah, correct. So in case of cumulative, what happens? Cumulative means that it keeps on accumulating. Okay. It keeps on accumulating. So Non-cumulative means that it will not keep on accumulating. It means it will lapse if not declared in that year. If an entity has issued cumulative preference stock, okay, in year 1, no dividends were declared. Okay. Why not declared? Maybe because the company did not have enough money. There were very little profits in the retained earnings, so they did not declare. What happened in year 2? The condition was improving, but no dividends were still declared because they wanted to keep some money for their capital expenditure. What happened in year 3? They have issued 7% cumulative preference shares. Okay. In the 3rd year, they had good money. So what they said that, okay, let's now declare dividends for this year. So when they declare dividends, they have to declare dividends for the 1st year, for the 2nd year, and also for the 3rd year. So starting from 1st year, the dividends have to be declared at the rate of 7%. Now, if any money remains, go to 2nd year, 7%. Any money remains, 3rd year. If, say, for example, it got exhausted here, then this carries on over to the next year. So whenever it gets declared, it becomes the legal obligation of the entity, and whatever amount that is debited in the retained earning actually starts from year 1. Whatever is your legal obligation to pay, it starts from that period. Okay. However, if I have declared non-cumulative preference stock, okay, non-cumulative, so that means it has to lapse. 1st year, no dividends. 2nd year, no dividends. 3rd year, I declared dividends. 7% non-cumulative preference stock. Pay 7%. That's it, close. I did not have enough money to pay 7%. Okay, then whatever it is, you just pay and lapse. Okay. Nothing goes from here to this year. Nothing goes from here to here and here to here. Non-cumulative. Okay. So only here, after I have declared, will I pass this entry retained earning to dividends payable. We will do dividends part in module 3 and 4.
So then what is the benefit of cumulative preference? Because in the 1st year, like company has not earned profit, right? 2nd year company has not earned profit, but 3rd year if they earn the profit, so retrospectively they are paying, right?
Yes. So
Okay.
that's the advantage. Cumulative definitely has an advantage. Non-cumulative will not have an advantage. Cumulative always have more advantage over the non-cumulative ones, because in any case, whenever the dividend is declared, it has to be paid from the 1st year itself.
Okay.
So retrospectively has to be paid. Cumulative always is a more advantageous position.
From the investor's point of view.
Advantage to the investor, right?
Investor's point of
Not-
view.
Investors, yes, it is. So because look at it from the company standpoint. In order to invite the investors, this is what they have to do. Otherwise, because there is no contractual obligation, no legal obligation on the part of the entity to pay, you tell me what is most beneficial for the company? To keep all that money in the retained earning and never pay dividend. Is that not most beneficial? That is most beneficial for the management. But if they do that, how will they find more investors in future?
Yeah.
This is for the investors' interest that the company has to do this. Right?
Okay, yeah. I was looking at from company point of view.
Yeah. So even from the company's standpoint, they still have to do.
Yeah.
Right?
To attract
That
more
they're able
investors.
to get more investors.
To attract more investors. Yeah.
Yes. So now the next point is available. Additional paid in capital. Yesterday, Sarthak, you got disconnected. Now, we passed one entry for the excess amount in over and above the par value, right?
Yes.
Yes. So, would you like to repeat that journal entry? Because then Kavya passed it on your behalf.
Yeah, I can. It is debit cash and credit common stock, and the excess amount will be credited to APIC.
Yeah. So, whatever is over and above is credited to your additional paid in capital, right? In addition to that, additional paid in capital, these are the certain transactions that also impact the additional paid in capital. Now, all of them will be covered in your module 3 except for the quasi reorganization, which is covered here itself. Okay. So yesterday I told you that this is now not a very heavily tested topic, but sometimes they can test you on this also because this is in your syllabus. Okay. So we'll do this part. Now the rest of it we will do in module 3. So which means that you have to learn the valuation of the treasury stock. So whenever the treasury stock is bought back from the company, how the company arranges for that money, whether we debit the retained earning or whether we debit the additional paid in capital, it completely depends on, what type of treasury stock transaction is happening. Okay. So based on this, the entry will be passed. Second is the quasi reorganization. Third is the issuance of liquidating dividends. Again covered in module 3. Conversion of bonds, okay, into equity. How does this take place? This also will be part of the next module. Declaration of small stock dividends, again part of your module 3 and 4. So I am hoping that in the third and fourth session, we should be able to cover this part. Okay. Now comes the next part, which is your retained earning here. So retained earning, we all know that this is the start point is the net income or loss, which is coming from the income statement. Then we pay dividends out of it, right? So because this is the journal entry that we have passed, retained earning debit to dividends payable. So that means if any dividends are declared from the by the management, then it reduces my retained earning. The prior period adjustment, this will be covered in your next chapter. Okay, how do we do the prior period adjustment? This is like a retrospective adjustment that has to happen, and it is directly from the retained earning, not from the income statement. Now, what happens is sometimes few transactions we don't take to income statement, but because some adjustment is needed, we directly make that adjustment in the retained earning. Anybody can tell me the reason why do we do in few cases transaction adjustment from the retained earning directly? If instead of transferring, say for example, there is a prior period adjustment, okay, or let's say for example, there is an accounting principle which is changing, okay, now this is done on a retrospective basis. I think, yes, accounting changes. This is what I've mentioned. So this is a change in the accounting principle. Fine. I'm going from one method of asset valuation, or I'm going from one method of inventory valuation. Okay. So we have different methods, LIFO, FIFO, weighted average. So I'm changing from one method going to another method. Now, don't you think this will lead to changes in my income statement? Right or not? Right?
Yes,
Yes,
yes.
yes.
My
That's
COGS
why I
will change, my inventory value will change. Now, LIFO FIFO
right
is basically what? To value my inventory. Now, if
inventory.
I'm changing from last in first out to first in first out, I'm changing vice versa, or from weighted average. Don't you think that this is going to have an impact on the income statement also?
Yes.
Right? But I'm telling you in this line, which is highlighted here, that we will not make that adjustment in the income statement. Instead, we do what? We make that adjustment retrospectively directly in the retained earning from the first period presented. Any specific reason why we are not disturbing the income statement?
Because you have to change all the financial statements if you are making changes to that for past years as well.
Okay, but then the retained earning, definitely whatever is the net income remaining, that gets anyway transferred to the retained earning. The reason is because the entity does not want to tell its stakeholders that this is the change which is that which should actually impact my income statement of the current period. That means why should my income statement get impacted because of an adjustment which is happening on a retrospective basis because of my change in accounting principle? Directly, whatever money is there in the retained earning, only that money is adjusted. And once that money is adjusted, in any case, all of that is taken care of directly. This period's income statement should not take the burden, or it should not take the advantage of this retrospective adjustment in the principles which is happening. Because this the income statement is basically whatever transactions or businesses that I have incurred during the
During the
period,
period.
the income that I've generated and the expensive that I've incurred to generate that income. That should be presented on my income statement, and not issues like my changes in the accounting principle should disturb or should make it volatile. That's the reason why we decided to keep the unrealized gains and losses out of my income statement. Why unnecessarily disturb that period? My stakeholders will start feeling nervous about it.
Okay.
But this adjustment anyway has to take place, because sometimes it may result in loss, sometimes it may result in gain. So let the retained earning only take the benefit or the loss of it. Okay. So income statement for the entire period should not get disturbed by such kind of transactions. Right? Similarly, we have one quasi reorganization. So quasi reorganization is what? I think I have mentioned this. No. In a separate note, I have quasi reorganization. Let me just share it. I will tell you what quasi reorganization basically means. So quasi reorganization is basically an accounting adjustment entry. What happens in case of a quasi reorganization is this. Can you just give me a minute so that I can find it somewhere? I think I have it. Just give me a second. If I have it, then we can do immediately with the numbers. Okay, I think I do not have it. No, that's there. No, I don't think I have it here. Okay, I'll figure it out. I've mentioned it somewhere. Let me just explain it. Okay, here I have it. Not in the LMS, but in my separate notes I have. Okay. I will share this one. Okay. Do you all see this practice problem?
Yes.
Let me first explain the concept and then we can go over to the practice problem. What happens in case of a quasi reorganization is that the entity is suffering from losses. Do you see in the retained earnings, $210,000 loss? So that means repeatedly this company has been incurring losses. That's why my retained earning is showing a negative amount of 210,000. Do you all see this or not?
Yes.
Yes, ma'am.
Yes, ma'am.
So here is this company called ABC. This shows a deficit in the retained earning of $210,000. This is coming from the equity section of the balance sheet. Okay. Retained earning is minus 210. The equity shares that this entity has issued and are outstanding as on the last day of the year is 310,000. Okay. How did you get this? You get $30 par value multiplied by 10,000 shares that have been issued. The additional paid in capital, EPIC, is 150,000. Okay. So this is what the equity is. Now, Sneha, are you there? No, Sneha is not there. Payal is there.
Yes, ma'am.
Payal. Sum this up. 300,000 plus 150 minus 210. What do you get?
2,40,000.
240. So this is what I've mentioned in white ink here, that this is the sum total of my equity capital. In a quasi reorganization, the management wants to reduce this retained earning to zero. Reason being because they are now expecting new investors. Now the new investors are looking at your balance sheet. They are thinking that, oh my God, the condition of your company looks really terrible. Can you do something about it so that the condition of your company looks a little better, so that we have a plan ready with us? We can invest in your money, and then going forward, you can start making money. But in this kind of a bad situation, it really looks difficult. So they do what? They set this amount to zero. Oh my. No, it will not work. Hold on for a second. So the entity sets this amount of 210 to zero. Let's read this. At least the screen is visible a little bit. Looks like some issue. The screen is visible?
Yes, ma'am.
Yes, ma'am.
Okay. So what is mentioned under total equity is that the management of ABC company has
It's gone.
initiated a quasi. I know it has disappeared.
Yeah, now it's not visible.
It has disappeared. I understand. Yeah. It is not supporting me. It is not responding. Please move this window away from the shared application. Okay, this is why it is not supporting. Okay. It's not supporting because I've opened this. Let me just open my PowerPoint presentation, put it there so that, we at least don't end up wasting time. Okay, just hold on for a second. You all can see my PowerPoint?
Yes.
Ma'am.
Yes.
Yes, yes.
So this company had a retained earning of 210,000, which was negative. So the management sets this amount to zero. Okay. By passing some journal entries. Just hold on for a
Yes.
second. This is creating a little bit of an issue. Just hold on. I'll fix it. Okay. So I think my internet is also not supporting me today. All right. So now what happens is, we had in our share capital $30 par value shares into 10,000 shares, right? Equity. This was the information mentioned there. So $300,000 here, right? And then what we had in the retained earning is minus 210.
Hmm.
What we had in our additional paid in capital, only this information was mentioned there. And I think this
150.
is 300, no, sorry,
No, this
100.
was 150.
This was
150.
It is 150, 150. So let me ping you this question. I have this, Bhavna. So
Sorry,
I have this question. So let me ping you
Rajiv
on
has
the.
this question.
Yeah.
Yeah, Rajiv, we have done this question before. That's why you have it. Yes. So this is now set to 0. How do you set this to 0? What is the journal entry, Sarthak, you think we should pass to set this amount to 0? If there is a debit balance in the retained earning and I want to make it to 0, what you logically think should be done?
I think it can be share capital to retained earning.
Sorry?
Share capital to retained earning. I'm not
Yes.
sure.
So what we do, this amount which is at par, because I told you that this is possible only with the consent of the shareholders. So we reduce the legal par value of these shares. Okay. From 30, we reduce it to some amount which is consented by the shareholders and transfer it to retained earning. Okay. So my retained earning is credited. And if I'm reducing the par value of my equity shareholders, Sandhya, what should happen here? Let's say, for example, if I'm reducing it from 30 and making it 5 only. So that means I'm reducing it by 25. Sandhya, right? So if I'm
Yes, ma'am.
reducing it by 25, what entry should I pass here? Share capital account debit to some amount.
Hmm.
What is the amount here? In the retained earnings, Sarthak has told me that we should credit this amount. So
Right.
how much is the amount which is coming here? 210 is the
25.
Retained earning.
is the debit. And I want to set it to 0. So if I credit it by 210, this will be set to 0 or not?
Yes.
Yes.
Yeah. So if I'm reducing the par value from 30 to 5, that means I'm reducing the value of my common stock from $300,000 to only 50,000.
50,000.
So
Right.
that means I am basically debiting it by 250,000 or not.
Right.
Yes.
So now what is the plug-in value which is remaining here is transferred to additional paid in capital?
40,000.
How much of it is remaining? 40,000.
Yeah.
So now, what sort of multiple choice question can you expect here? The multiple choice question number 1 can be, is quasi reorganization, if it is not a legal readjustment, then whose consent is needed? Consent number 1, management's consent. Of course, yes, the management is the one who is taking the decision. But the consent, of course, has to be taken of the equity shareholders because we are reducing their par value. If they say that you have to take the consent of government, no, because it is not a legal readjustment which is happening. So your SEC's involvement is not there. In a multiple choice question, they can give you options like this. So the correct option is that it has to be on the basis of consent of the shareholders. Then they can tell you that if they are reducing, what is now the total equity balance of the entity. Okay, let's first understand this. Equity balance or total equity, if that has to be calculated. Let's do this, Kavya, together. Okay, what was the share capital before?
3
Yeah.
lakh.
$3 lakh. By how much
Yes.
have we passed the debit entry? We passed the debit entry. Debit entry means that we have reduced the share capital.
2,50,000.
2,50,000. Then outside what amount? 50,000.
50,000.
Okay.
Yes.
Now here somebody told me that, Pyle, what amount did you give me earlier?
2,40,000.
2,40,000.
So that means before the quasi reorganization, 2,40,000
Yes.
or 210. How much? 240.
No, it's
240.
So
2
that
lakh
means my share capital is now 50,000. Okay.
Hmm.
Right.
Now Rajiv will tell me. Rajiv, you already have the solution ready with you. How much is retained earning earlier? 210?
Negative 220, 210, sorry.
I credited this retained earning. So that means I'm adding it to 210. How much is the total that I can put here? 0.
0.
Now, number 3 is additional paid in capital. How much was this earlier? 150?
Now it
Yeah.
is 190.
Now what? We have credited it more
Credited.
because, yes, 40,000 more. How much is the total now?
190.
190. Sandhya, what is the total now?
190, 150 plus 40.
240.
50 plus
190.
40,000.
comma I have put wrong.
Yeah. Same 240.
240. So which means that the total of my equity before quasi reorganization and total of my equity post quasi reorganization remains the same. Correct or not? There is some adjustment within this equity itself. Interline adjustment is happening within the equity, which is not disturbing the total equity value. This does not need any SEC permission. This does not need any government authorities permission, because this is an internal adjustment that the entity is doing with the approval of the shareholders, because ultimately retained earning is something which belongs to the shareholders, right? Because this amount is freely available for their distribution, and this is their money, shareholders' money I'm using to put it here in the retained earning. So the par value or the equity share capital is also their money, retained earning is also their money. I'm using, transferring it from one bank account to another bank account of the same person. What is the problem? Right or not? So the question that they may ask you can be based on any of this. What is the equity total before quasi reorganization and after after reorganization? You actually don't have to do all this calculation. If this is a straight question, answer it very straight, because this total does not change. That's point number 1. Point number 2 is that if they tell you what is the total share capital after quasi reorganization based on the facts that have been given, you calculate it immediately. What is total additional paid in capital after quasi reorganization? You calculate it immediately. But remember to pass this journal entry.
Right.
This journal entry is the heart of it. Okay? So the total does not change.
I have a doubt.
Yes.
Like, instead of reducing the par value of the share, why are we not taking the money out of APIC? Because in treasury stock, the concept is we take the money out of APIC treasury stock first, and then we hit the losses to retained earning after APIC stock does not have any balance left.
Tell me one thing. Does the additional paid in capital completely, whatever money is there, now after you have read the treasury stocks, after you have read the liquidating dividends, everything, do you think that it belongs to the shareholders?
No,
Then,
APIC belongs to the company.
yes, that's the answer. So if you are transferring, or if you are disturbing one person's bank account and you tell him that I am transferring it to your bank account itself in another branch, you just have the permission. This transfer is much easier to do. It is an internal decision that has to be made. However, if you are disturbing your additional paid in capital, there are other aspects also that get disturbed. And it does not completely belong to the shareholders. Right?
Okay, got it.
So that's why it is with the approval of the shareholders that we make such adjustments.
So
Okay.
100% shareholders should be agreed for this, or is it like above 50% is okay, right?
No, there is nothing mentioned that 100% or 50%, but it's just that it has to be with the permission of the shareholders. Now,
Okay,
if
so
they
we
are,
will
if
we will
say
not
for
get any
example there
question.
are different, classes
Right.
of shareholders that have been
Mhm.
to whom different shares have been issued. Okay.
Okay.
So then the
Okay.
entity would take the permission of only those class of shareholders whose par value is getting reduced, because
Okay.
par value in ordinary circumstances cannot be disturbed at all.
Mhm.
So it completely depends on that. Okay. So we have covered this quasi reorganization also. Now the income statement, this was something that I had asked you to just go through yesterday. There are two
Mhm.
types of income statements that are prepared. Okay. Now, because all of you are working professionals, have you seen in your organization, particularly, let me check with Sanjay and Indu. So the multi-step income statement, have you seen, or you have seen a single step income statement in your organization?
Bhanu, I don't see because I'm not working in this field, so sorry
Okay.
about it. Yeah.
What about Sanjay?
Yeah, I was working earlier in accounting, so it was multi-step.
It was a multi-step. Okay. So
Mhm.
what happens in most of the big companies that you see, multi-step income statement is what is followed. Now, Kavya, just have a quick glance at this income statement, the two tables that are given here. And what do you think is the difference between a single step income and a multi-step income statement, and why I said that big companies opt for the multi-step income statement? What do you think? All of you are
Uh,
looking at the screen, right?
yes. I think one of the major difference which I saw is the multi-step income statement gave us a more clarity on the different like we have the operating income, so we have the different classifications. But in single step income statement, we don't have this. So this is the major difference which I saw in between single step and multi-step income statement.
Okay. Let me now take you to a single step income statement, which is actually a full-fledged income statement. Okay. Single step. Now, what is your opinion? Are you not seeing different types of revenues here? Sales revenue, service revenue, interest revenue, rental revenue, gain on sale of available for sale, other revenues.
Yes, but
Expenses also an elaborate description. Payal, right? Elaborate description, cost of goods sold, cost of services, cost of rental, sellings, general admin, interest, depreciation, loss on sale, restructuring, income tax expense.
Yes, they have clubbed all the expenses and all the income together. They have not bifurcated between the different expenses like operating, non-operating, then interest. Then means from the multi-step we can understand what is the core nature of the organization, and what they are getting amount from the ancillary services, that we can bifurcate. That is from operating and non-operating, the bifurcation we can see. And also the interest is on the different head, and also there will be a different head for like other revenues, like that. So we have different segments from where we can say simply understand that from the operating what is the actual operating income and what is the actual non-operating income or non-operating expenses, so that we can check.
Okay. Payal is 100% right. Payal, there is just one more thing. Can you tell me what is operating and what is non-operating?
Operating means the which are required for the day-to-day operations, and non-operating means which are not required for the day-to-day operations, uh, 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 like uh, uh, like the ancillary expenses, which may not be required for us for the day-to-day operations. Like if a company's main income is from like selling a particular product, but they are also getting some additional income, like by making a fixed deposit, then that is the non-operating income, that is not clubbed under operating income.
Okay, so the income that they earn on the fixed deposits, that's ancillary activity.
Yes, yes.
Payal is 100% right. Okay, so all of us now have understood already that the difference between a multi-step and a single-step income statement is to show to the world that, this is coming, this is the income that we are generating from the core business activity of the entity. Okay, so when I'm generating so much of income from my core business activities, it helps people understand how good or how bad am I doing in my core business. Particularly very useful for the investors to understand, because they want to invest in your entity when they know that whatever is your core business, that's giving you revenue. If you are able to generate enough revenue from your core business, you have a good chance to sustain, to survive in the business. Okay, and they have a good chance that their business, their money will grow in your company. So hence this becomes an advantage of a multi-step income statement. On the other hand, when you look at a single step income statement, which is mostly followed by companies that have small scale of operations, less number of items to be reported, not very much really required for the outside investors or creditors, then they can club all their revenues and all their incomes together, which means that income from their operating business is nothing but their core bread and butter revenue generating activity. If I'm a garment manufacturer and I'm selling garments, so all the revenue that I generate from selling the garments is the revenue from my operating activity. If on the other hand, I am the garment manufacturer, I have 4 floors with me in which the production facility is located, and one floor I see is not being utilized properly, and I think that in the next few months this floor will be lying vacant. So why not to just rent it out and make some money out of this vacant space? Now whatever rental income that I generate by letting out this space, only which is for a temporary period, the revenue that I generate out of it will be clubbed under the non-operating revenue. If on the other hand, Sanjay, to answer your question, where in the example that you did yesterday, they have under the head operating income, they have clubbed rental revenue also. Right, Sanjay?
Yeah.
So why have they done so? You know, what are the conditions, the circumstances when this can happen? I am a garment manufacturer. I had built for myself 4-5 floors. But end of the production, I realized that, see, I'm not able to utilize that one floor at all. It is always lying vacant. Let me just rent it out. So not on a temporary purpose or a temporary period, I rent it out permanently. And regularly, I am consistently, I'm generating rental income from this particular rent also, or from this property. Then this will be clubbed under my regular income. Because now, although I'm a garment manufacturer, but I'm also into the space of renting. One person vacates, my place is still vacant for another person to come and take it on rent. So on a regular basis, I'm generating rental income. So it becomes in a way not an ancillary or a side business for me. This becomes my operating business. I am a garment manufacturer and also I'm into real estate. So in this particular example that they have given here, this particularly means that it is assumed that this is happening on a consistent basis year after year. If, however, on a question you see that they have mentioned specifically that it has been rented out only for temporarily for some time, say for example 6 months or 8 months in this year, but it's not the regular item, then it will not be their operating or core business. Okay, so that's what the difference is. Here there is an assumption not specifically mentioned, but this is what the assumption is. Okay, so that's why the sales revenue, the service revenue, and the rental revenue has all been clubbed under the operating incomes. Okay, so that's
But
the main.
Bhavna,
Yeah.
yeah, but Bhavna, there is a doubt because even you are saying that the rental that business is doing, right? Uh, we have to check whether it is temporary or it is permanent, right? But that is not the core business, right? Core business is like production.
Yeah, correct. But if you are doing it on a regular basis, that means you intend to continue this in near future also and keep generating revenue. So look at it from the standpoint of an investor or an outside stakeholder. Don't you think that you are more interested in checking the net income which is coming from the business, which is happening on a consistent, on a regular basis? Compare and contrast this transaction with the sale of furniture. Do you think the sale of furniture is a good news, or sale of an equipment which is used for the production is a good news for the investors, even though it might have given me some gain, which is reported in wherever I reported? But if the person is looking at it from the investors or outside stakeholders standpoint, he will say that, you are selling the facility which is tomorrow going to give you money, which could have generated income to the entity tomorrow. That means this entity is not growing. But if, however, you have a space lying vacant and you are utilizing it for the purpose of rent, making continuous money from it year after year, this definitely is your operating income. You have to look at the consistency of the transactions. If on question they mention that this is done on a consistent basis, you club it under the top line. If they say that this is not done on a consistent basis, then you do not club it under in the top line. Okay, so this is what the main difference of a core and non-core or non-operating revenues and expenses is. Always look at the time period during which it is happening. And it is not just 1 year that we take into account. If they have given you more information, like say, for example, if they have given you comparative financial statements, this can help you understand on a comparative that, what is happening in the previous year. Were they carrying out the same activity in the previous year also? And if they were carrying out the same activity, how much revenue has been reported under this activity? Okay, so look at it from that standpoint. All right, so here is a normal, Sanjay. Yeah. So if really needed, see, I can share with you a little bit more examples of the same that can help you understand. Let's say, for example, we have sale of scrap. Okay, so sale of scrap also is taken as your, generally it is taken as your operating income. Why? Because this is coming from your manufacturing process, which happens on a regular basis, and on regular basis you sell scrap also. Okay, so although you are not in the business of selling scrap, but this is related to your core business, which happens on a consistent basis, and these are the byproducts that are being generated that you don't use, you sell them as scrap and generate some income. Okay, so yeah, this needs a little bit of more research to understand. But from exam standpoint, look at the consistency of the transactions. So now we have the very first part that you see here is net income from continuing operations. So continuing operations basically means I'm picking up only the single step income statement right now. Simple, easy to understand. So continuing operations income basically means that, income that you are generating from the activities on a continuous basis. Okay. Now underneath this is mentioned add any income from the discontinued operations. Now, Kavya, tell me one thing. If any operations are discontinued, why should I report income from that? And what does logically means? If an operation is already discontinued, how does this logically end up coming in the income statement?
Because maybe we earn some income or we have some expenses for that particular discontinued part, so we have to report it.
Okay. So what in your opinion is discontinued here basically?
Any operations which any chain or anything which is not continued by an organization is considered as discontinued.
Okay. So wherever this is mentioned, discontinued operation, you can add another line or put a slash here and write or held for sale. So that means either those operations that have been absolutely abandoned, discontinued during the year, or those operations that are still in the process of being discontinued and they're held for sale. Okay, under both those circumstances, any income or loss which is related to those operations is added up here. Okay, so we will take up many examples from discontinued operation, heavily tested topic here. So we'll come to this part. Just understand the multi-step income statement first. In the multi-step income statement, we report the operating income. Now this you have to decide based on your conceptual understanding. As Sanjay rightly pointed out today about the rental income being added here. So like this, what are the case facts that have been mentioned? Okay, so you have to decide on the basis of that what comes under the operating income, which is the core bread and butter activity of the entity, or income which is consistently being earned by the entity and generating it revenue, less the cost of sales or cost of goods sold. So generally cost of sales is the term that we use in case of service industry. Okay, however, in case of the manufacturing industry, the term used is cost of goods sold. That's the only difference. Now you reduce from this, you earn gross margin. You reduce from the gross margin all the operating expenses. Okay, the big operating expenses that are reported here are called SG&A. Okay, so selling expenses, general and administration expenses. Now, what is general? Okay, so what's basically the selling expenses? Anyone?
A
What do you think
sales,
are the, yeah,
a salesman's salary, salesman's commission, wages.
wages? Wages
Yeah,
paid to the labor?
Like
not to the
sales and
labor,
marketing,
sales and
Particularly for the
marketing.
sales.
Sales and
marketing,
marketing.
Acha, let me ask. So, raw material expense, where will that go?
cost of goods sold,
Okay. Labor that has worked in my factory on that raw material.
SG&A.
SG&A,
COGS.
एक second. Sumanta said that?
Yes, yes.
Ah, Sumanta. So please take your notebook and a pen.
Yeah, it is with me.
You are writing it?
Yeah.
Okay. So my question to my participants was that if there is raw material on which the labor has worked in the factory to convert it into finished products. Okay. So the wages paid to that labor, where will that wage be taken? On the income statement.
Under cost of goods
cost of
manufactured,
goods sold.
Why?
because that is the direct labor.
Yeah.
And indirect labor? Say, for example, there is a supervisor who is just standing and staring at how the labor is performing.
Yeah, then
Admin
it
expense.
come under SG&A.
Okay. Who said that? Payal.
Yes.
You take out your pen and a paper. Note that down. Sumanta, so your answer was that the labor which is working on that raw material, any wages paid to that labor should come under SG&A, General Administration Expenses.
Yes.
Right? And Payal said that in case there is a supervisor who is constantly staring at how the direct labor is performing work in the factory, that should come under SG&A, but the direct labor should go under the cost of goods sold. Right?
Yes, ma'am.
Okay. All right. Now tell me one more thing, Payal. So now what is happening is that there is a forklift driver in the factory. So he's just taking up material from one part of the factory and delivering it to another part of the factory, not directly working on any of the products there. The salary or the wages that I'm paying to him.
It will also come under cost of goods sold.
Why?
Because he is directly involved in moving the materials from the to the factory, so that's why it will come under cost of goods manufactured, because he is directly involved in that.
Okay. I have purchased some, please note that down, whatever you are saying. Okay. Now I have purchased certain supplies, certain chemicals. Why? Because my factory machine needs regular cleaning. So this is good for all machines that are working continuously in my factory. So those cleaning supplies are very expensive supplies.
Yes.
How should I charge them to the income statement? Where on the income statement should this be written off? Those cleaning supplies that I'm purchasing, it is more than the wages that I'm paying to the supervisor or to the labor.
It will come under SG&A.
Okay, note that down. लिख लिया?
Yes, ma'am.
Okay, don't erase that. All right. Now what happened? I forgot actually the flow. The first should be the material I'm bringing from my supplier, bringing it to the factory. I'm paying some transportation cost. Kavya.
For the raw material.
The raw material I'm bringing from the supplier and I'm taking it to my factory.
Yes.
The transportation cost or the freight in. Normally what we call is freight in. Where should I
Yes, it
write
should
that?
be charged under COGS.
Under COGS? This is the
Yes.
transportation cost.
Yes, but it is directly involved to the raw material. So
Acha, theek
I
hai,
think-
write that down. You are also holding a pen and paper?
yes, yes.
हाँ, please लिखो. Acha, now, Rajiv. So now my entire thing is ready. My boxes are all packed. In the factory, I've got an order from a customer. The customer says, please deliver 100 boxes of the item produced at my factory. So the transportation cost involved here is called freight out cost, right?
Yeah.
So where should I write that? Directly involved in taking off the finished product from my factory to my customer's factory.
So these are my selling expenses.
Sorry?
These are my SG&A.
SG&A. But it is directly related to the moving of item from one factory to my customer's factory.
All freight out, advertisement, everything is my
Freight
selling
out.
expenses.
Okay. So you are saying that this should not be the cost of the material or cost of goods sold? No.
No.
You all agree?
Yes.
Yes.
What is the difference between
We are
freight in
moving
and
the
freight
finished
out then?
goods. Yeah.
Why so much of discrimination?
No, but we are moving out the finished goods. We are not moving out related, right? These are related to selling the material, not not manufacturing the material, right? Not the
Okay, but I am
production.
not satisfied with the answer.
Under COGS, I think only the expenses which are direct in nature, that is related to the directly producing the goods.
Producing the goods or whatever is the main
Yeah.
business.
Or
Yeah.
bringing the raw material from the supplier to the factory is also a direct expense, because without it, the
Yes.
production of goods won't be possible. So it is also under COGS. And I think the supervisory salary that we are incurring inside the factory should also be into COGS, because it is somewhere directly related to the production of goods.
But it is not directly related.
But
How
it
will
is
you cost the product? Because one supervisor is not only looking at one product, he is actually supervising many different labor who are working in the same factory, working on many different products. Product 1, 2, 3, 4, like this 10 products are being manufactured. Then how do I include his salary in one of the products and not the other?
like we can allocate it for the entire production of a month, like we allocate for example, electricity or water supply expenses uh, that is added to the cost of the product. So We can similarly, consider the proportion of what we can divide yes, its salary into the parts.
Okay. All of you are right. Okay, so Payal, hopefully now you have got the answer. The supervisor's salary, who is not directly working on any one product or who is not directly involved in the production, is said to be indirectly involved in the production. So always remember this rule. The rule is that whenever any expenses are being incurred, okay, in a factory, okay, up to production is complete, up to that point, they are all capitalized. Capitalized means that they will all be
Cost.
included in the value of inventory. Once included in the value of inventory, that means this part remains on the balance sheet until sold. Once it is sold, we apply the matching principle and then we debit the cost of goods sold. Okay, COGS is debited by the value of inventory which is going out of my factory. And I credit my inventory because now my inventory has reduced. It has left my factory, my asset has gone down, my expense on the income statement has gone up. Right? So this COGS basically includes direct material, it includes direct labor, and it also includes indirect expenses. These indirect expenses in case of a factory are called as factory overheads. And the supervisor's salary is an excellent example of this. Why? Because one supervisor may be looking at many different labor who are performing work on many different types of products. So his salary, say for example, in a month, he's getting paid $5,000. So this, I think this is a high amount for a supervisor, but yes, we are very rich people. We distribute really good salary to the supervisors. So this supervisor who is working on, let's say, for example, 5 different products. So on some basis, as Sarthak said, that his salary will be allocated to each one of the products. Okay. So this direct labor is working on product 1, product 2, product 3, product 4, and product 5. Depending on the time that he is spending on supervising the labor who is working on these different products, is this 5,000 will be allocated. So for example, if the supervisor is spending an equal amount of time on each of these products or supervising labor who is manufacturing these products, this can be divided by 5 and therefore his salary, $1,000, gets added to each of these product costs. How you directly add the direct labor cost, you allocate the indirect expenses, also called as factory or the manufacturing overheads. So always the indirect expenses that cannot be directly traced to any product are allocated on some reasonable basis. Okay, so this we will do in the upcoming part. Okay, this makes up a good task-based simulation question. So this is basically the concept of your COGS and your SG&A. In the selling expenses, you include all the marketing expenses, all the expenses that are paid as commission to these people, okay, who are involved in the selling of the product. All those expenses will be included. Even the freight out expenses, as Rajiv has correctly pointed out, that will all become part of your selling expenses. Then your basically the term is SG&A, which is selling, general and administrative expenses. So general and administrative expenses will include all the expenses that are incurring outside the factory. Okay. Now, let me just give you one more example. If say, for example, there is an employee, okay, he is working in the accounts department and he is earning a salary of, let's say, for example, 3,500 per month. Okay, there is another employee. He is working in the factory and he is involved in some production related work. He's earning, let's say, for example, $500. Okay. There is depreciation expense that we are charging. The total depreciation expense could be anything, but we are bifurcating it between the office or the admin block and the factory. Okay. Let's say, for example, $1,000 here and $1,000 here in the factory. Okay. Now the total power and utilities expense related to my office department is $500. Related to my factory, where the production work is going on, is, let's say, for example, $1,000. Okay. I have taken the entire place on rent. Okay. Now the total rent that I'm paying is $7,000 in a month. But out of this, 50% is occupied by my office. Rest of the 50% is for my factory. I will bifurcate on the basis of the area occupied. On your exam, you can expect a question like this, wherein they will give you two expenses or they will give you only one expense, and they will tell you that part of this expense is towards your office or your admin work. Okay. And part of this is for your factory. Anything and everything which is related to your factory, always remember they've already included in the inventory, and therefore on the income statement, whenever it is sold, it comes as COGS. But if it is related to your to your office or to your administrative, then this becomes part of your income statement. And where does this go? This will go to your general and administration expenses. So sometimes they can give you salaries also like this. Salary of one person. Partly this person is working in the factory, partly he is working in your office. So anything that he is doing related to your office, you have to read carefully on what basis the allocation they are suggesting. Sometimes it is basis of time, that 50% of the time he is doing each work, or he is doing 60-40. Then that ratio has to be taken to bifurcate, and only the amount which belongs to your factory or to your office or to your administration purpose will become part of your general and administration expense. The rest, everything becomes your inventory, and basically until this inventory is sold, this remains on your balance sheet only. So please don't forget that. Okay. So in the income statement that you have on your LMS in the resources, that also requires the same type of bifurcation. Okay, so let's see, Sumanta, what in your opinion should happen here? Sumanta?
Which one?
Yeah. So I think this was depreciation. Okay. Now you tell me, Sumanta, an employee who's working in the accounts department. Accounts department is basically what? Office work,
Office
admin work,
work.
right? So this
Yeah.
should go where?
Administrative expenses.
Yes. So that means on the income statement straight. These are basically called your period cost.
Yes.
As and when it is incurred, you write it, charge it to the income statement. But these kind of factory or inventory costs, these are called as product cost. Do not charge them until it is sold. When it is sold, it becomes COGS. These are called product cost. Familiarize yourself with these terms. Period cost means incurred in a period, charged to income statement as and when incurred. Okay. Okay. What is the spelling I've written? Ulta hi likh diya. Employee. Okay. So this employee who works in factory, Sumanta,
Yeah.
what should I do with the payment that is happening in the factory?
It is COGS. Product cost.
COGS.
Product cost.
COGS. So right now I am not concerned whether it is direct or whether it is indirect. That is not the ask of the question. Okay. The ask of the question is whether this is your income statement, period cost, or whether this is your product cost. So if it is sold, this product is sold, then it becomes your COGS. Okay. Your depreciation expense, office depreciation, if they have given a bifurcation, sometimes they can give you a bifurcation based on the area which is occupied.
Yeah.
Read that carefully. How they are asking you to bifurcate. There is no rocket science in this. You only have to pay attention to the words that are written in the question. Okay. So office, that means this is a period
cost.
Period.
Factory, this is a product cost.
Product
We will charge it in COGS. My
Yeah.
inventory gets debited by this amount, right? Again,
Yes.
my power and utilities, factory, sorry, office. This becomes my
Period
period
cost.
cost. Factory is my product cost.
Product cost.
Rent again. Similarly, if there is insurance, they can give you any expense. Okay, only what you need to do is read it carefully. This does not need any more explanation or understanding. Okay, only reading is the key. Then once all of this is reduced, what you get is operating income or loss. Okay. So other non-operating revenues and gains, interest is a part of it. Why? Because interest is something which is not your core business. However, if I just change the nature of the business and I say that the income statement that you are looking at is of a
Bank.
bank, of a financial institution, okay, then this interest becomes your core revenue. In that particular case, you shift it from here to here. So always we have to keep applying your head. Okay. So your brain has to keep working all the time. Gain on sale of available for sale securities. Okay. Now yesterday, what did I tell you? Available for sale security. वो हमने OCI देखा था.
Yes.
OCI देखा था तो उसमें मैंने क्या बताया था?
Unrealized gain on available for sale security will go to OCI.
Yes, so that means available for sale security here I have disposed of. And this is a realized gain on the available for sale security. Well, what goes in the OCI is basically the debt securities. Okay, and what is a debt security, Payal?
Debt security means like debt security means, wait 1 minute.
Okay.
Debt securities means invested to lend money to some entity.
In?
Invested to lend money to some entity, that is the debt security. Means we have
Yeah.
invested.
Say for example, if I've invested in bonds of an entity.
Right.
Okay. So
Yes,
as
yes,
an
yes.
investor, Indu, as an investor,
Uh-huh.
I can invest either in the equity, I can invest in the
Invest
equity
in
security
securities.
of an entity, or I
Mhm.
can do what? I can invest in the bonds or debentures of another entity.
Another entity.
I can buy those bonds. So when
Mhm.
I am investing in the equity of another entity or the preference stock of another entity, what basically I'm doing is that I'm becoming the owner of that entity.
Right. You are
Okay.
investing.
And
Yes.
my interest here is to earn dividends.
Mhm.
But here, when I've invested in bonds or debentures of another entity, my intention here is to
Get
earn
interest.
interest of that, whatever the interest is declared. So these
Right.
bonds and debentures, they all have a maturity date. How?
Mhm.
Because how they are issued is that the company will say, or the issuing company, also called as issuer, they would say that the bonds are due for redemption after 10 years. We pay interest semi-annually. In US, usually semi-annually interest.
Mhm.
Okay. We pay interest semi-annually. Whatever is the percentage, say 5%, 5.5%, whatever is the semi-annual interest that they pay. Okay.
Mhm.
So, or they may sometimes say that we pay 5% annual interest. Read the question carefully. 5% annual interest paid semi-annually. So that means you have to divide it by 2.5
2.5.
semi-annually. Okay. So like this, when there is a maturity date given, that means you are talking about your bonds.
Bonds.
Okay. So the same investor is invested here. So this is what was discussed yesterday, that the available for sale security falling in any of those three categories, if it is unrealized debt, okay, but there is a gain because of the market movement happening, that unrealized gain will be transferred to OCI. However, if there is a realized gain, that means we have disposed it off. If we have disposed it off, then it is okay. This is the final gain. Let it go to the net income, which gets transferred to the retained earning, which ultimately has to be distributed as dividend. So, which is fine. Okay. Now, gain on sale of fixed assets. Okay. Non-operating revenue. Gain on sale of fixed assets. We all know that this company is not involved in the selling of fixed assets. Fixed assets, by definition itself, means that we are procuring those assets as an investment. The intention is to use them for next few years until their useful life gets over, and they will give money to us, generate income. So whenever there is a sale of fixed assets and it gives you any gain, leads to any gain or any loss, then it will be written under your non-operating revenues, gains and losses. Okay. So then comes your finally net income. Out of this, your income tax expense, always it would be given what percentage need to be applied, apply that. And then from that, your continuing operations income will be calculated. Again, discontinued operations after taxes. After taxes means net of taxes are written. Okay. Sum them up, we arrive at our net income. Okay. Now this was the part that we.
Bhavna, I have one
Again.
question.
Yeah.
Uh,
Go ahead.
Can you go back to the statement? You mentioned one of the examples where you have divided the depreciation expense or rental in two parts. One is factory depreciation and office depreciation. So here this depreciation expense is office depreciation, right?
This is office depreciation because the factory depreciation would have been here.
Already, yeah, added in the cost of sale, right?
Yes.
Okay.
This
And
is
similarly,
mentioned here
rental
on the
also.
income statement. This means that they are considering this as your period expense.
Right, right.
The
Okay.
product expense is here.
Immediate cost.
Yes.
Bhavna, can we have a break?
You want a break? What is the
Yeah.
time?
6:30.
6:30. Okay, right time to have a break. Okay, so let's just see कि इसके बाद में क्या करना है. See, this is what we covered yesterday. All of you are clear with this concept at least?
Yes.
Comprehensive income.
Yes. Yes.
Okay, then comprehensive income can be prepared in two ways. Either we can show Indu how?
One statement or two way, right? What's the
There are
name?
two ways of preparation. One way is
Right.
what?
One way is this including net income plus that and consolidated. No, not consolidated. Like
One.
income statement and comprehensive income statements together.
So this can be either as a single continuous financial
Your two
statement
separate.
or two separate consecutive statements.
Right.
Okay. So wherever you show it as a single continuous, which means that it will still have two sections.
Two sections.
Section number 1 will be net income, 2 will be other comprehensive.
Uh-huh.
But when it is reported as two separate statements, first statement will be called as statement of net income, another will be called as statement of comprehensive income.
Comprehensive income.
And this second statement will begin with your net income.
Right.
Okay, as is given in your Coca-Cola example. So this is your two statement approach that they have followed here. All big companies follow two statement approach. Net income is calculated after this EPS calculation is shown, and then your two statement approach starts with your net income. So if on exam they give you any statement starting from your net income itself, that means there is a
Two statement.
Two statement.
statement approach that they have followed. Okay, and then finally Puffy that we learned yesterday, and then other comprehensive income, and the total of net income and other comprehensive income is comprehensive income. On the balance sheet, what we show
AOCI.
as a, ये AOCI नहीं है, कौन बोला?
मैं बोला, सुमन.
हाँ, ये AOCI नहीं है, ये है SOCI, statement of changes in stockholders equity. Why we call it changes in stockholders equity? Because from one year to another year, whatever changes are happening are reported. And see, different classes of stocks are mentioned. EPIC is mentioned, retained earning, AOCI, treasury stock, total equity. Under the heading of retained earning, net income is mentioned. Under the heading of accumulated other comprehensive income, AOCI, net of tax is mentioned, right? And then EPIC, whatever changes have happened during the period. Then the treasury stock transactions, any changes that have happened are all reported, right? So this is what it is. ये single statement approach है, ये भी हमने आपको कल बता दिया था. And यहाँ से, okay, I will start from here after the break. ठीक है?
Okay.
But I want to at least do few questions today, whatever time it takes. I'll just see how is situation at home, and then we can decide. Okay?
Okay.
Okay. All of you.
Okay.
So let's gather after 15 minutes.
Yeah,
Okay.
6:50.
6:50. ठीक है, सुमंता आ जाना.
Sure.
Okay.
I'll be taking a bath.
Sumanta, are you here?
Yes, yes.
Very good. So how was the break? Enjoyed it?
Fine. Yes, I took a bath.
What did you take?
I took a bath.
Bath. Okay. I thought you wanted tea or something.
Tea I'm drinking. I have got my flask beside me.
Okay. Everyone else ready?
Yeah.
Yes.
Yes.
All right. So, so this is what basically we have learned in our last 2 days session, that, how these, all the financial statements are interconnected, interrelated to each other, right? So we have items from the income statement that go or get added up with the other comprehensive income, and they finally form the comprehensive income, right? Then this part of it from the income statement, this goes to the retained earning. Part from the comprehensive income, which is other comprehensive income, it flows to the AOCI. Retained earning and AOCI, they both are part of the shareholders' equity, right? And they are presented on the balance sheet as the equity of the entity, which consists of the assets. Assets is equal to liabilities plus equity. That's the basic accounting equation that comes from the balance sheet balancing. Okay. Then you have a balance sheet which is related to your statement of cash flows, because your cash flow, whatever the balance is given, that should reconcile with the closing balance which is given on the balance sheet. So when we do the preparation of the cash flows, that time we will understand this last relationship also. Okay. Also given at the bottom of it, you may just read through. Okay. Now, as I told you yesterday that, understanding of the accounting standard codification, which is given as per the US GAAP, or, which is framed by the Financial Accounting Standard Board, which is FASB, commonly abbreviated as FASB. That's the accounting standard body that frames the accounting standard in the United States. So they have, from whatever we have covered since yesterday, in their different accounting standard codifications, which is mentioned here on the right side of the screen, they have given for every single line item on the of the financial statements. Like, for example, the balance sheet, which is also called as the statement of financial position, the codification, which is given for the purpose of presentation, etc. The components that should be there is contained in 210. Then for the shareholders' equity, okay, which is for the during the entire period that it is prepared for, that this is contained in 215, so and on so forth. Okay, this is not that important, but this is what is really important for you all to understand, because this is a snapshot from your Financial Accounting Standard Board website. Okay, accounting standard codifications are all mentioned here. Now if you all just give me 1 minute, I want to actually try that out here. If I'm able to do it here, then it will be really good, so that, directly you will know how the questions that relate to your research, how are they basically calculated, they are arrived at. So just give me a minute. Okay. So I'm not sure if I share my screen like this and I keep shifting, will you be able to see it?
Yeah, it's visible.
My screen is visible to you?
Yes, it's
When I'm
visible.
seeing FASB and all, is that visible?
Yes.
Yes.
Okay. So this is the FASB website. You all can see the website?
Yes.
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 Okay. Now see, I'm going to accounting standard codification here. Okay. The whatever items that you want to download, you have to make a payment. But if you just want to read the accounting standard codification, there is nothing that you have to pay. This is needed for your research-based question. Okay. Click here and you will be granted access. You all can try this. I think it will work on your laptops. I'm not really sure if it will work on your cell phones also.
How many research-based question would be there?
There will be one.
Oh,
In the task-based simulation, you will find that.
task
So they will give you some case facts that as an accountant, you are stuck in this kind of a situation and you want to refer to the FASB, okay, or to the accounting standard codification. Where will you go? So on the left-hand side of the screen, do you see these general principles, presentation, assets, liabilities, equity, revenue? So
Yes.
this is how they have basically divided everything, okay? So if I go to the presentation, do you all see presentation of financial statements, balance sheet? This is
Yes.
the accounting standard codification, the very first part of it. Okay, so this is the basic code. Okay, then 215 is for the shareholders' equity, 220 for the income statement, comprehensive income, 225 income statement, cash flow statement, notes like this. So if later you want to refer to anything, okay, then this is how you will refer to. So let's click on the balance sheet. So in the balance sheet, you will find topics like this, okay? These are the subtopics that are given, mostly industry-wise, okay? So similarly, if you go to the presentation part of it, so in the presentation, the first 4, if you see, so out of this, the discontinued operation is, which is very much in your syllabus, okay? Go to discontinued operations, and then everything in the discontinued operation along with the illustrations will be available for your viewing. Okay, so in 205, you have 205-20 dash this, whatever the number that you are looking at, will take you to the exact place where you have been asked to refer to. Okay, so that will give you the points that are 5 in number. Okay, so if you are able to get 205, 20, and if supposedly whatever case they have given, it falls within the scope, then 15 is the right answer. If supposedly they are asking only about the background of anything, then 05 is the right answer. Okay, and under this also, every single paragraph has been numbered like this. So paragraph number 1, paragraph number 2, like this. Okay, so in the discontinued operation, if I want to look at what is the definition of a component of an entity, which is actually part of your syllabus, okay, then here is the definition which is given, that a component comprises of operations and cash flows clearly distinguished, etc., etc. Okay, so they may ask you this, that a company is stuck and they want to understand, that whether this particular segment that they are talking about for the purpose or considering for the purpose of discontinued operation, will they satisfy the definition of component of an entity or not, according to this. So where should you look into to understand whether it falls within that definition or not? Then this is what the answer is. 205, 20, 05, 1. And this is how exactly, as you keep typing, it will keep ticking it. Okay. So this is what I've mentioned here also. Okay. So here is the snapshot that you can see. All of you can see the LMS now.
yes.
Yes.
So this is the same screenshot that I was just showing you of the discontinued operation. Okay. Now the balance sheet, we know classified balance sheet, but sometimes the balance sheets are also presented on the basis of the liquidity. Okay. Now the liquidity basis of balance sheet specifically required for specific industries like banking industry, insurance sector. So these are the kind of the industries that require as per their regulation under which they are formed and registered, that the law requires them to present a different type of a balance sheet. However, for most of the general purpose reporting, the classified balance sheet is what is required as per regulation SX. What is regulation SX? This is the law of the Securities and Exchange Act, okay, 1933 and 1934, which we will study briefly here in FAR and elaborately in our regulation. Okay, so they basically define what should be the content, what component should be included, how the presentation should be made, how many years of balance sheet, how many years of income statement and other financial statements should be contained as part of your financial statements. Okay, so all of that is studied under regulation SX. That's very much part of your first syllabus or your first chapter itself. Please hold on for a second. Okay. Now, this is the pass key. Pass key means that you can expect such kind of small questions on your exam. A balance sheet and its limitations. We all understand that it is extremely important for the stakeholders, but sometimes the balance sheet has its, like any other financial statement has, balance sheet also has its own limitations. Like, say, for example, some assets and equity items that are presented on their historical cost, okay, or basically the net book value, which is presented after the accumulated depreciation, that may show a value which is completely different from the market value. In case an item is not impaired and I do not have, like an example that I quoted yesterday, that you have an indication that your technology, because of technology, your equipment is completely obsolete in the market. There will be very few buyers. If there are buyers, they will not agree to pay the carrying value of your machinery at all. That means your machinery is impaired and this impairment loss should be booked. If on the other hand, I reverse the situation and I say that the only competitor of your company or the only competitor who was also producing the kind of inventory or the goods that you are holding is all of a sudden he has lost the market because of whatever reason, maybe he has gone bankrupt. Now you have the entire monopoly, so you can dictate the market prices at your wish. So your inventory in your factory is lying at your cost, okay, and this will be the real value of the inventory, but actually you can sell this inventory at a much higher price than what was originally expected. Will you increase the value of your inventory? No, you will only increase the price. So that means your inventory value is much higher than what it was previously valued. Similarly, the machinery, initially we have booked an impairment loss, but what if the value of this machinery actually goes up? Will you actually book that as your gain while you are still holding that machinery? No. But tomorrow, if you want to sell that machinery, the price paid by the buyer will be much higher than the price at which you have booked it in your books. So that means there might be, in many cases, differences between the carrying value and the fair value of the assets that are shown on the balance sheet. So this is one big limitation of your balance sheet. Now, we also use measurements that are very subjective in nature, which is second bullet here. They require estimation and assumptions. So most of the times the useful life of the fixed asset, which sometimes is a huge charge on your income statement, which defines the carrying value also of the fixed assets, there might be a huge difference. Okay, your useful life is based on your estimation. Okay, but the useful life can also change on the basis of your estimations. If your estimation changes, it is going to impact your income statement. And please remember, all of you, unlike your change in accounting principles, okay, going from FIFO to LIFO, from weighted average to some other method of accounting, that's considered as your change in accounting principle. But when you change the estimates and assumptions, that's only and only considered as an item that needs an adjustment going forward on a not on a retrospective basis, but on a prospective basis. So this does not hit your retained earning at all. Only going forward, your income statement will show a different figure than what it was showing originally. So when you keep two income statements, okay, for comparison purpose side by side, you might see huge differences in the depreciation amount, which can lead to huge differences in the net income being reported, which can lead to huge differences in the amount being taken to the retained earning and being available for distribution for as dividends. So because of your estimates and assumptions, it can lead to tremendous change. Now, there may be alternative accounting policy choices that can lead to different figures. As I mentioned earlier, somebody can follow LIFO, somebody can follow FIFO for inventory valuation, right? All these methods, you will see in future when we do the measurement and the valuation part of it, how they impact the inventory value. Okay, inventory value going from FIFO to LIFO, or following one of these methods can have actually huge impact on the valuation of your inventory. Inventory is a very, very important item on your balance sheet because this comprises of or is one of the component of your current asset, which is a big item seen by the investors of the entity that you're holding. Okay, so again, differences, and this is an accounting policy choice of the entity. Okay, so the accounting standards do not force a company to follow only FIFO, or this type of industry should follow FIFO or LIFO. So LIFO is followed only and only in US. LIFO is a very complex inventory valuation method, but US is ready to do this. Rest of the world is not comfortable doing LIFO. So if you look at the Indian accounting standards, LIFO is prohibited. If you look at the IFRS, LIFO is prohibited. But in US, they are comfortable doing it. I would not say that they are comfortable doing it, but yes, it is complex accounting, but it is being followed there. Okay. So similarly, adoption of different methods of depreciation, which is also completely accounting policy choice. Somebody wants to follow a straight line method. Somebody wants to follow other methods that are accelerated depreciation methods, okay? Written down value and all. So that's completely company's choice, and it can really lead to very different results, not only on the income statement, but also on the balance sheet as well. Now coming to income statement. Now, before I go into the details of income statement, you all have seen that small little picture that I've shared before the class?
Yes.
Yeah. All of you are comfortable with that picture?
Yes.
Okay. So, Sarthak, what have you understood? Have you seen that picture?
Yeah.
So, what have you understood from that?
Like it has bifurcated the operating and non-operating activities of a business. And the operating activities are further divided into revenues and expenses, whereas non-operating can be revenue, expense, gains, and losses. Like, I think it means that operating are only whenever we are representing an operating activities, it is represented as a gross concept mostly, and non-operating can be gross or net, both.
What is the meaning of or difference between gross and net?
Like gross is when you are showing the entire amount or like the entire revenue, because we are showing the operating course of the business. What is the total revenue we are generating, and then what is the expense we are incurring. Whereas net is the like gain on sale of machinery. It is non-recurring. So we are not showing it as a gross concept. We are directly showing the amount we gained during the transaction.
Yes. So we do not basically show what was the selling price and book it under revenues, because that's not our revenue, right? So all the gains will be shown only net, which means the end result of the transaction, whether it resulted in gain or the end result of the transaction, whether it resulted in loss. Only that final amount is shown. So when you show only that final amount, that basically is called as your net amount. All of you are comfortable with that part?
Yes.
I think that's a
Yes.
very, very easy concept, and the chart also makes it clear. So please remember, when you are looking at the operating or when you are looking at non-operating, revenues and expenses will be under both. And wherever you have revenues and expenses, you should always remember that we have to take it on a gross basis, which means that if I have incurred any expenses to generate any revenue, be it from my core business or be it from my non-core business, it has to be shown separately, revenue, separately the expenses that have been incurred to generate that revenue. Okay, so a very simple example of this is the same, say, garment manufacturer. This garment manufacturer is manufacturing garments and selling it. Okay, so when he is selling it, the sale revenue generated is mentioned separately, specifically. This is for the people to know that so much amount I'm generating from my business. Okay, and whatever expenses he's incurring to generate this, they should be shown separately. Don't net it off, directly write off the expenses from the revenues and show only as one line item. No, that's not allowed. Okay, because that will not give a clear picture of your income statement. However, wherever gains and losses are involved, so that means gains and losses are basically the final net amount. If you show on the income statement, that's good enough for people to understand in short what has happened. However, in the notes to accounts, a disclosure of that is also required to be made, so that we know that how much gain has been generated, from where exactly is this happening, because only just one word or one item on this cannot help us understand what exactly has happened. Okay, now these are the basic definitions. You can just go through it. Important one here is the expense. What does this say? Expense basically means costs that benefit only the current period. So when I say that I've incurred any cost, okay, but this cost I have incurred, it will give me benefit in the future also. That means there is an element of asset which is involved in it. And that element of asset has to be bifurcated. This element of asset could be my fixed asset. This element of asset could be my prepaid expense also, right or not? If I've incurred any cost which is giving me benefit beyond my current financial year, there is an element of asset involved. So let's just quickly go through the prepaid expense. What is the prepaid expense and how these entries are passed? Rajiv, do you want to go through the example? Just read the first two paragraphs.
Okay. ABC Corporation follows the calendar year as its financial year. It pays an insurance premium of $1,200 on April 1st, year 1, covering the period up to March 31st, year 2. So that is 12 months. Since the financial year ends on December 31st, year 1, only the portion of the premium related to April 1 to December 31st, 9 months, should be recognized as expense in year 1. Accordingly, the insurance expense to be recognized in year 1 is calculated as follows: $1,200 into 9 divided by 12 is equal to 900.
So what is the meaning of this? If I go back to the definition of expenses, I'm basically saying that anything that is charged off as my expense in the current period should be benefiting only the current period. Okay, so anything that goes beyond the current period, that should not become part of this year's income statement. Why should my current income statement take the burden of anything which is actually going to benefit my organization in the next year? So here is an example of it. So the insurance premium, which has been paid and the amount is $1,200. This company is ABC, follows calendar year. So that means from January 1 till 31st December. So in US, this is what they follow. Okay. But this expense has been incurred or amount has been paid only in the 4th month. Okay. So January, February, March, they have not made any payment. So this payment is made on April 1. And this will cover a period of 12 months. So that means part of the next year also is covered in this $1,200 that I have paid. Okay. So in this period, how much or how many number of months are being covered in this period that come under this 1,200 amount? Only
Yeah, from
9
April to
months.
December. Yeah.
So from starting April 1, year 1 till 31st December, year 1 is the period which we are getting the benefit of this insurance premium paid. Hence, we need to bifurcate this amount into this same time period also, because the benefit of the remaining amount will be enjoyed only in the next year. Okay. So this is what therefore we have done. 1,200 we have divided. We have multiplied by 9 by 12 to make it $900. So this is the cost of the current year. Okay. Now, what are the journal entries that we pass therefore? Who wants to pass these journal entries?
Insurance
Sandhya, do you want to
expense.
pass these journal entries?
Yes, ma'am.
Okay, please pass. Yeah, tell me.
Insurance expense account debit 900. Prepaid insurance 300
Okay,
to bank.
okay. Now, Indu, can you tell me, this is the entry that I'm passing on which date?
On December.
So I'm passing on December. Okay. Sorry.
Like in the yeah, income statement. And next year we will reverse this prepaid expenses, right?
So what will be the entry that I pass in the next year after I have availed the benefit of this remaining $300?
Then we will need to credit the prepaid expenses and book the expenses and insurance to prepaid.
So that means the benefit has been availed in the subsequent period, right?
Right, right.
And this is a derecognition of my current asset. Prepaid expenses, Sandhya, are current assets or are non-current asset? Or is there a possibility that it can either be current or it can be non-current?
It is current assets because it pertains to next 12 months.
So if I pay to some company, if I sign a contract and I say that you will do my office maintenance work for next 5 years, and right away I'm paying you $5,000, the entire amount will be booked under whatever. For the next 5 years, the entire amount will be booked under current asset because I've paid already in advance. Don't you think this is prepaid? Now they will keep providing me service for the next 5 years.
Yes, but a part of it will go to current and a part to non-current.
Yes. So that means just don't jump to conclusion. Read the case facts. Okay. Not necessarily. It completely depends on, sometimes bifurcation might be needed. If bifurcation is needed, please do that. Okay, na? So this exactly what I have just mentioned here. Again, these are the gains and losses that are reported on a net basis. This requires journal entries, and I think most of you are comfortable with the sale purchase journal entries, right? Basic accounting.
Yeah.
So here is the original cost of a machinery. Purchase for $10,000. The accumulated depreciation is $4,000. Okay. This results in the carrying amount of the book value, which is $6,000. On the balance sheet, it is appearing at $6,000. But now the person is selling this machinery and he found a buyer for $8,000. Can we all pass a journal entry? Definitely, yes. This is
Yes.
net amount which is reported. What is the net amount? Is net amount 10,000, net amount 6 or 8 or 4? Payal, what is the net amount here that should be reported on income statement as gain or loss or whatever?
2,000.
2,000. All of you agree with this? So that's the
Yes.
gain.
Yes.
Chalo
Gain
Payal,
on sale of-
entry pass karo.
Okay. Bank account.
On the date of sale,
Date of sale, it will be bank account debited 8,000. To
okay.
machinery account 6,000. To gain on sale of machinery 2,000.
Machinery डाल दो.
To machinery
Debit.
6,000.
No, no, no,
Machinery
no.
debit करना है.
Machinery.
No, gain on sale of.
Credit.
Credit.
Machinery
Machinery credit.
6,000. To gain on sale 2,000.
No, depreciation also.
Yes, that accumulated
So
depreciation also
depreciation.
accumulated
Accumulated
by
depreciation will be
4,000
debited. It is
by
an expense.
4,000.
ये
no.
कर दो पायल.
नहीं.
No.
Yeah, like what I have done is that I have done the machinery net amount. I have not done the machinery gross minus depreciation. So if we want to do the gross minus the depreciation, then to machinery will be 10,000 and depreciation will be 4,000 in the debit side.
इसमें net amount कौन सा है?
Net amount is the 6,000 for the machinery, which is the
Yeah.
carrying value of the
ये
machinery.
net
Carrying value,
amount है.
yes, carrying value of the machinery.
काव्या,
Yes.
net amount कौन सा है?
Yes, 6,000 is the net amount. After
ये
depreciation, after
report कर दूं
depreciating
बैलेंस
in our
शीट में? Sorry, income statement में ये report कर दूं?
no.
This is
2,000.
2,000 only gain will be reported.
Entry
Gain.
बताओ.
Bank debit 8,000, gain
Bank
debit
debit
2,000, to machinery 6,000, and accumulated depreciation 4,000.
ये मत बताओ. Debit credit बताओ मुझे.
Debit bank
Uh,
and gain.
Bank तो bank is
no.
debited already.
Debit bank by
Gain
8,000, debit accumulated depreciation by 4,000, credit machinery by 10,000, and credit gain on sale of machinery by 2,000.
Kavya, very nice. So my accumulated depreciation pile, I am debiting. Kavya, what is the amount of accumulated depreciation? 4?
Yes,
4,000.
4,000.
Then what should I credit?
To
Machinery?
machinery 10,000.
Yes.
Machinery credit by $10,000.
To gain on sale of machinery 2,000.
What is the amount that I should report on the income statement?
2,000.
2,000.
Net amount which goes on income statement. Gain is reported net. Now this is the entry that they will definitely 100% make a note of it. Every single CPA FAR exam, they will ask this entry. Not only FAR, but in audit also. Make a note of it. And many people make this mistake. This is correct though. You are ultimately getting a gain of this. But you will not credit machinery by just 6,000. Why? Because on a balance sheet, you are writing machinery how? You are writing machinery 10,000 is the book
minus.
value that you have
Yeah.
written.
Yeah,
And
got it.
then
Yes.
you keep
That's
reducing
accumulated
your
depreciation.
accumulated depreciation charge for every single year.
Yeah,
Right? So this is how you report your machinery. So similarly, your machinery has to be removed from here by removing 10,000 first. And then for accumulated depreciation, because generally every year, what entry do you pass for the accumulated depreciation? Depreciation
Depreciation to
expense to
accumulated.
accumulated depreciation. So if you have to remove this accumulated depreciation, which is a credit balance, you will have to debit it so that this gets de-recognized. Accumulated depreciation is a contra asset, right? Which means
Yeah.
against the asset, it reduces the value of your asset. So you debit this credit machinery by the book value or the historical cost. Okay. Do not make this mistake of passing this entry. It is now considered as a wrong entry. Okay.
We are crediting machinery by $10,000 because of historic cost concept, right? Like we have to remove as the same amount we have shown in the balance sheet.
Yes. Why? Because when you make a ledger, okay, when I'm carrying my machinery here in the balance sheet or presenting it at 10,000, Sarthak, let's make a ledger. Machinery का ledger account बनाओ. I have purchased a machinery for 10,000 rupees. Machinery account debit,
To cash.
To cash.
whatever,
Bank.
cash, bank, whatever,
Bank.
10,000.
Yes.
Yes.
So that means this is a debit.
Mm-hmm.
Debit में
Yes.
डाल दो.
Yes.
You know what? Every single year, यहाँ से it will be carried to the next year.
Right.
10,000 again, close it, and then
Yes.
again balance, beginning balance.
Brought down,
Will
yes.
be carried at 10,000, closing will be again 10,000. So every single year, my ledger account will show 10.
Yes.
So unless you pass that entry, your machinery will not close down for at 10,000. So when ultimately you have passed that entry, then if your beginning balance is coming at 10,000 and you have sold the machinery, let's pass that entry again. In your bank, you have got how much? 8,000,
8,000.
right? Your accumulated depreciation was 4,000. Your machinery has been credited by 10,000 and the remaining amount is your gain. Now your machinery gets credited by this amount.
Mm-hmm.
Now you close it. However, if I write directly 6,000 Payal, 4,000 का क्या करूं?
Balance will be there. Okay.
Mm-hmm.
Right, Payal?
Yes.
So don't make this mistake.
Okay.
All right. So all of this is mentioned here. How do you pass basically these entries? Extremely, extremely important. They will definitely ask. They don't leave on these kind of small, because these are the conceptual entries, right? Please
Yes.
go through this. Please go through this. Okay. Now, Sanjay, here I have written rental income as non-core because my assumption is that we are not doing it on a consistent basis, right?
Yeah.
So look at the consistency of this. The past unexpired cost, you may please go through this. When it is charged to unexpired cost is basically the asset which is there because you have paid more in the current year, the benefit you are going to avail for this in the future. So this can be in the form of your fixed assets. This can be in the form of your inventory. This can be in the form of your prepaid items or your cost of patents, which is nothing but your intangible. And when do you charge it to the income statement? When you have used it. Okay, so inventory is charged to the income statement when you have sold those goods. Insurance when you have that period is expired and you have attained the benefit of it. So net book value on the basis of depreciation, every single period as you use the asset, you keep depreciating it, right? On that basis. And the patents and all are all amortized, right? Goodwill is also an intangible, but it is not amortized. It is only tested for impairment. Make a note of it. Small question can be asked as a multiple choice. Okay. Now we have unusual and
Can you
infrequent
repeat the
items.
goodwill point again?
Sorry?
Can you repeat the goodwill point again?
Goodwill is not amortized. You don't amortize any goodwill. Sarthak, what is amortization?
For intangible assets, it is a depreciation.
It is?
It is like depreciation of intangible assets.
Yes. So can you give me an example?
Like
I've manufactured a drug, okay, and I got the patent in my name for that
Yes.
particular drug. I
Okay.
have it for a period of, say, 3 years.
Yes.
Okay. Then how do I, the whatever cost that I've incurred on this, how do I deal with this?
I think the cost that is incurred will be added to the cost of patent because patent is an asset. And
Yeah.
if for some reason we are losing the value of that patent, it will be considered as amortization.
If for some reason what?
We lost the value of that patent, then it will be considered as amortization.
So what happens is that in most such cases, let's just simplify this by giving an example. If I've purchased this from market, somebody who had manufactured had sold the right to use that particular item to me. So that right is nothing but the right to use that manufactured drug in that particular manner, right? So if I have procured this and this right I have only for a period of 3 years, I have paid $100,000 to the seller of this patent. So should I write off that $100,000 immediately in the year I have purchased it? Because now I'm going to use this manufacturing formula to manufacture the drugs for the next 3 years.
Actually,
Sell
it
it
will
in
be
the market.
distributed. It
Yeah.
will be
In
distributed
3 years.
over the useful life of the patent. If it is 3 years, then we'll divide the amount by 3 and yearly we will write it off as amortization expense.
Exactly. Similarly, if I am manufacturing it and I have the right of it, of the using this manufactured drug, okay? So whatever cost that I have incurred, just how I do for the self-constructed fixed assets, a building that I have constructed myself, okay? That's in the category of a self-constructed fixed asset. Do I not charge depreciation on a fixed asset which is self-constructed?
We have to charge.
Yeah.
Similarly, in case of these kind of intangibles, okay? So after the research and development phase is over and we know that this is not a failed project, because till the time the research and development is going on, we really do not know whether this will be a successful project or not. So it is not wise to capitalize it. So in most of the cases, well, India does it differently, US GAAP does it differently. We have a chapter on intangible assets, but in most such cases, the research and development up to that point, up to the point we do not have the assurance that this will be a successful project, we do not capitalize anything. But once we have crossed that feasibility phase, okay, and we know that this is a successful project, then all the costs that we have incurred, we capitalize that under the head of intangible asset. And then on some reasonable basis, we amortize it. How we amortize the self-constructed fixed asset. Okay, the concept remains the same.
But what should we do in the case of land as a fixed asset?
Land is never depreciated.
Yes, yes, yes.
Land will be carried at its original cost.
Oh, okay.
Yeah. Okay. So now we have income from continuing operations. We know that there are two ways to make that income statement. One is multiple step income statement, which means that the operating revenues and the non-operating items, basically not just the revenues, but the operating items and the non-operating items are separated from each other and shown separately on an income statement. Now, I am assuming that all of you have completed this income statement yourself. No, not done?
Yes.
I
Yes.
know Sanjay has
Yes.
done. I know
Yes,
Rajiv has
yes.
done.
Yes.
Okay. Chalo, Indu. Let's walk through this. Can you help us?
Yeah.
Let's begin with the sales.
You want me to make share the income statement?
Just tell us, yeah, if this is sale and this will come under the operating, the head basically where it gets classified.
Yes. So sales revenue comes under the operating head.
Yes, then What about the sales return?
Sales returns will be, yeah, this also the part of the sales, because we will deduct from the sales revenues, and all the sales discounts is also part of that.
Okay. So that means
Service
we
is
do not,
non-operating.
so that means we do not show sales return and sales discount as your
Yes, we will
debit
show.
in the
We will
expenses.
show in multi. Yes, we will show in
No, I
in the
really don't
statement.
think so. Because sale is always shown net, which means that the discounts and the returns are all deducted. Okay. So even if you are making a multi-step income statement,
Mhm.
the concept is net sales. So net does not mean that you are here in this
Showing.
particular case reducing the cost of goods sold. Here for net means that the total sales that you actually have generated during the period after reducing the sales return and sales discount.
Okay.
Okay. So when you look at the gains and losses and the
Mhm.
net word usage there means net means that we are only considering the net final conclusion of that transaction which resulted in either a gain or a loss. But here, because we are talking about the revenues, here
Mhm.
net means that the total net revenue after reducing all the discounts and after reducing all the returns that have happened during the period.
Okay.
Okay. So again, here we have assumed that the rest of the line items after this sales, which is your
Right.
service revenue and which is also your rental revenue.
Revenue.
These are the consistent businesses of the entity and the entity regularly does it. Okay.
Mhm.
Yeah. Please go on.
Yeah, so we will add up all these revenues and deduct the discounts and returns. This will show, and after that, the cost of goods sold is given. So no calculation is needed. We just
The
take it as
operating
it.
expenses. Yeah.
Right.
Yeah. And then cost of service sold. This is a reduction from your, this is basically the expense that you have incurred in rendering the
Incurred for
services. Okay.
right.
So because now
Right.
services are considered in the operating revenue category. So this is an
So we will
operating
deduct.
expense.
Mm-hmm.
Okay. Now what about the salaries expense? Here in the star mark is given the salaries expenses $25. It is sales staff and $55 to the corporate officers. Okay.
See,
So if you get a task-based simulation where they give you, an income statement, in that income statement, they will give you separately. In fact, the very first task-based simulation, which is in our LMS also, that's based on this kind of an income statement itself. Okay. So you have to write or include in the salaries or basically the selling expenses only $25, which is paid to the sales staff. Remaining salaries that have been paid, which is 80, is basically your general and admin expense.
non-operating.
No, that's also operating. That has been incurred to generate your main business. Okay. Revenues from the main business. General and administrative expenses are also your operating expenses. Why operating expenses? Because without incurring those expenses, you would not have generated revenue from your core business also. Okay. So you paid salary to the staff. This salary paid to the staff is $25 bifurcated as selling expense and remaining 55 as your general and admin expenses. But your selling and general and admin are both your operating expenses. Without incurring this expense, just think of it logically. Had I not incurred this expense, could I have generated my operating income or not? If your answer is no, that means this is an operating expense. Okay. All right.
Yeah.
Now, freight out. Rajiv, freight out is?
It is my selling expense.
It is a selling expense, clubbed under selling expense, right?
Commission
What is
as well.
commission? So unless they have mentioned specifically that the commission has been paid. Commission could be paid to anyone. Maybe a real estate agent, they have paid commission. So if they have not mentioned anything specifically, then we assume that it has been paid to the sales staff.
Sales.
Okay. So for this is the selling commission. Then what we have is advertising. So Payal, advertising, what do you think? Where does or why do we incur advertising expense?
For selling expense, for sale,
So
it will
this
will
is
come under selling expense.
selling expense. Selling expense is a broad head, right? So
Yeah.
selling expense. What about insurance expense? Should it be clubbed under my selling expenses or my general and administrative expenses?
Journal.
Sandhya, do you agree?
Yes, ma'am.
What about depreciation, Sandhya? Depreciation expense should be booked under the head selling expense or my general and admin expenses?
It's
Or my
general and
factory expense? Or should I book
it is
it as a factory expense?
sir, ma'am, it is under a separate head, depreciation expense in operating expenses.
Okay. Income taxes. Sarthak.
Income tax will be shown separately
Why?
because after removing all the expenses, we get income before taxes. So we separate taxes after that. We have to add the current and deferred taxes.
हाँ वो तो ठीक है. But why? What is the need to show it separately?
I'm not sure about this.
So all of us have heard of this concept called materiality.
Yeah.
So not only the item is material because it is high in value, sometimes the items are material because of their significance for the entity as a whole. Not necessarily the monetary threshold is important. In most such cases, however, monetary threshold plays a crucial role. But such expenses as income tax expense are always to be shown separately because they are material items that the entity wants to disclose that so much income tax we have paid in the current year. Also, when we go over to the next chapters, there will be the concept of deferred taxes, the provisions that we are creating for it. If you merge it with the operating expenses and all, then everything goes for a toss because then it becomes very difficult to scroll through the schedules and try to just take out, how much income tax expense have we incurred during the period and on what basis have we calculated our deferred taxes. What was the provision made for the year, for the current year, and what is for the future. Okay, so it is for the purpose of materiality that depreciation also is considered as a material item for the enterprise. Even income tax is another item which is considered as material. Okay, so no matter how small this value is, we still have to show it separately. Okay, now what about the interest revenue? Lohit, I think today I have not really asked you any questions. Lohit, where does interest revenue go? This is not a financial institution, Lohit. Are you not there in the class?
Yeah, I am there, ma'am. I am there.
What took you, dear, so long to answer?
I think we will show it separately.
You show it separately?
Yeah.
So showing separately is not the answer that you will write on your exam, no?
Yeah, after operating income.
After? So what is the exact item name or head name?
Under operating income.
Is this operating?
Oh, interest revenue.
So that means you took a break long before 6:30.
No, ma'am.
Then tell me. I'm telling you that this is not a financial entity that we are discussing. This is a normal, maybe a manufacturing concern. Okay. So interest revenue that they have generated because they had some spare investments, They invested this amount in bank and they have earned some interest on it. Is this their operating revenue or a non-operating? What is operating is coming from the core
Oh,
business,
yeah. It is
the
a
bread and
non-op.
butter of the entity, which is the base of that business.
Yeah.
Is interest the base of this business?
No, it is a non-operating.
So that means it is non-operating. Non-operating can also be written as other revenues and expenses.
Yeah.
Okay. So other, under the head other revenues and expenses, this item will be mentioned. Other revenue, anyway, it is other revenue. Now, gain on sale of available for sale security. Sandhya, you have seen the recording yesterday?
Yes, ma'am.
Okay. So yesterday I was talking about available for sale securities. There were 3 securities, and mind it, I'm talking right now about the debt security. Okay. Now the debt security I am holding today, and I had purchased the security for $100. Okay. And today is December 1 year 1. 31st December, I'm still holding that security. Okay. Now the market price of this debt security, that means I've invested in some company's bonds. Okay. So on 31st December year 1, the market price of my security has gone up from 100 to 110. What is the journal entry that I need to pass? What are the accounts that are impacted? And where do you post it on the financial statement? काव्या, बताओ. काव्या.
Yes.
हाँ.
Can
Available
you?
for sale है. And it is a debt security. Debt security का मतलब क्या होता है काव्या?
Debt security are kind of instruments.
अच्छा. कौन से इंस्ट्रूमेंट्स हैं?
Like actually I forgot it just.
लोहित, तुम्हें ही मैंने समझाया था.
Yeah,
I
yeah.
remember. हाँ.
Yeah. Like these bond debentures which carry a maturity time.
Yes. So that means you have lent money, right?
Yeah.
To another entity. You are the lender of money. Correct?
Yeah.
So when you have lent money, somebody has borrowed from you. In a way, you are investor in that entity. You have invested in that money, not in the form of equity shares, but in the form of, but you have
Bonds and
given money
debentures.
in the form of your bonds and debentures, right?
Yeah.
Now, when you have invested in this security on the date of purchase, which was my December 1, year 1, the amount was $100. Okay? Now, on December 31st, when I'm drawing up my balance sheet, this amount is now $110. So there is an upward market movement. And because for this security, I'm not sure whether I will keep it for some period of time or I will hold it for next 2 years, 3 years. I was not really sure. Okay. So I could not transfer it to trading security because trading security means that I've earned it. I've invested in this for earning short profit. This is not held to maturity because held to maturity means that I'm going to hold it until it matures, which may be 5 years or 10 years, long-term period. In between trading and held to maturity is available for sale where the intention on the date of purchase is not clear. Okay. So this is an upward market movement that I'm seeing. This is an unrealized gain, Payal,
Yeah.
or not?
Yes, ma'am.
This is an unrealized gain. Should I transfer it to the income statement? Gain तो है, net basis पे चलो
No.
transfer कर दूंगी.
No, no,
It,
no.
it will be transferred to OCI.
OCI.
Yeah.
OCI में transfer कर दूँ इसको?
Yes, ma'am.
Journal
Yes.
entry
Yes.
बताओ. Journal entry.
Mm,
Lohit,
Yeah, ma'am.
okay.
what is the journal entry? I am transferring it to OCI. OCI balance sheet में कहाँ होता है? This represents debit balance या credit balance?
Credit.
OCI goes to accumulated other comprehensive income.
Yeah.
So जब हमने बैलेंस शीट पढ़ा, यूएस में ये साइड में हमने असेट्स पढ़े थे, ये साइड में हमने लायबिलिटीज पढ़े,
Liabilities.
और ये साइड में हमने इक्विटी पढ़ा था. यानी कि ये
Right.
क्रेडिट साइड है ना पूरी की पूरी.
Yeah.
Right.
So that means AOCI भी क्रेडिट साइड में ही आया है.
Yeah.
So it has a credit balance in case it is leading to gain. So this upward movement is a gain.
Right.
So my OCI should get credited. That's for sure.
Yes.
By how much? By $10.
Mm.
Right? Debit क्या कर दूं? पायल?
Debt. Unrealized. Unreal.
नहीं. All of you think about it for 30 seconds. Logically. पहली entry pass करो. On the date when I purchased it, what is the entry I passed?
Debt securities to cash.
क्या?
Debt securities to cash.
हाँ, मतलब investment in bonds. Okay.
Yeah, investment in bonds.
$100
Yes. $100. Yes.
to cash. $100.
Yes.
Okay. On the date when my investment value has gone up from 100 to 110, I want to show the world that see how rich I am now after 1 month. My investment value has gone up. Investment value has gone up. That means I want to show the world on my balance sheet that I am holding an investment which is of $110. How should I show
Yes.
this?
Investment in bond
Investment in
dividend,
bond.
unrealized gain on investment in bonds.
क्या
Fair value adjustment to unrealized gain.
मेरे को बुक की एंट्री मत बताओ, वो भूल जाओगे तुम. अपनी एंट्री बताओ दिमाग से लगा के. Only when you think, you apply your brain, that you will remember at the time of exam and throughout your life.
Investment in bonds 10 to OCI 10.
पायल, क्या एंट्री पास कर दूं? I am telling you all that I want to tell the world that my investment value is 110. Investment value is 110. I want to show it on balance sheet. Balance sheet में
increase.
assets में
Yeah,
investment
investment.
की value दिखा रही हूँ, 100 से ऊपर हो गया. Now it has become 110. So that means, don't you think ये investment में ही debit होना चाहिए?
Yes,
Only
yes.
then
Investment.
my value
Yes.
on the balance sheet will go up.
Yes, yes. Investment in bonds will be 110 to OCI 10 and to
ये
and
जो unrealized gain है, चलो मैं वापस से सारे एंट्रीज पास करूंगी. No confusion at all. Purchased. What? Bonds. Value.
Bonds.
Sanjay, what is the value of these bonds on the date of purchase? 100. What is the journal entry that I'm passing today? यहाँ पास करती हूँ. Sanjay,
Bond.
Yeah, investment in bonds to cash.
investment in bonds to cash. $110, right?
100. At the time of purchase, I will do 100.
My bank is credited by $100. Okay. Now 1 month after this, The market value, also called as the fair value. Okay, this changes. It goes up. From 100, it becomes 110. What is the journal entry that I should pass, Indu?
Investment in bonds to OCI,
Value.
10.
Why not 110?
Because 100 we already booked.
Payal, do you think she's right?
Yes, ma'am.
OCI. So this is the unrealized gain. Now, यहाँ पे तो I have not sold it. Okay. So I'm saying that this gain has not been realized. Unrealized gain.
Mm-hmm.
Transferred to OCI. But if I say now I'm selling it. Selling on December 31st. Year 1. For what amount? I'm selling it, say, let's say, for example, for 100 and chalo, let me do it at the market value. 110 ka I've sold it. नहीं,
Bank
थोड़ा सा और कंफ्यूज करते हैं. चलो. Let's do it on
120.
120.
Yeah.
Now, let's pass a journal entry. सार्थक चलो करो.
We are
Okay.
deciding to sell it on 31st December.
Let's
So-
pass journal entry. Decided नहीं, बेच ही दिया. I have found the buyer.
Okay, so cash account debited to 120.
हाँ.
Mm.
Okay,
ठीक है, कर
and
रही हूँ. Wait, I am passing that entry. Cash 120.
yes, we'll credit the investment in bond by 110.
Okay.
And gain on sale of investment in bond, realized gain,
This is how much?
10.
This is realized gain.
Yes.
Yes.
Okay. So this entry is correct because this is a realized gain. You can either pass this entry or you can first increase the value of your investment like this and then transfer everything back to your income statement as your gain on sale. Because then your investment value will also first increase by 120 and then it will be transferred. The balance amount gets transferred to your income statement because that is now the realized gain. If you pass only this entry, Sarthak, then what you basically are saying, you are saying that this $10 alone is my realized gain. On the contrary, your realized gain is actually $20, which is still lying in your OCI. So another way to pass this entry is because if you pass this entry, you will need to pass another entry by reversing this.
Right.
Right or not? Because now your realized gain is just not 10. You have actually realized gain of $20. So another way of passing this entry is instead of passing this, चलो पहले यहीं पे पास करते हैं. I will do this entry first. Same entry I pass again. Investment in bonds, $10. Transferred to OCI, $10. Or if you want directly, you can transfer to income statement $10 and then reverse this entry. ठीक है? यहाँ पे मैं ये नहीं transfer कर रही हूँ. So I'm transferring it here. So $10 here. Now I will pass this entry of cash. Because now all the gain is sitting in the OCI, $10 here and $10 here. All right. Now, if I pass this entry, already my investment is so much. Investment account debit by how much? 120, right? So, sorry, cash is here. Now my investment is 120 closed and then another entry where my OCI gets debited by $20 by my transfer to income statement $20. So in one entry, you have shown the entire realized gain instead of passing two entries for showing the realized gain. Because in first entry, you have shown only $10 transfer. In another entry, reversal entry, you have again shown $10. So it looks little bit confusing. So you first increase the value of your investment, bring it to $120 by passing this, increase your OCI by $10, and then you pass a reversal entry of your investments. So your total realized gain is this, which has been transferred in one shot to the income statement. Fine? Because in any case, your complete amount should be transferred to the income statement because that's the realized amount. Right, Sarthak?
Yes, can you just explain me the entry of investment in bonds to OCI is $10. This $10 is for the sale or for the appreciation of the investment?
Which exact entry are you talking about?
Cash to investment, the entry above that.
Okay. Ye wala, this entry, right?
The
This
one
entry.
that is above this one.
This one, right?
Just a second.
All of you have understood this or not? Otherwise, I will explain this last entry again.
I don't understand
Let's
last
pass.
sentence.
Sorry? The last entry?
Yes.
What is the value of my investment when I am able to find a buyer? Now, what is the meaning if I'm able to find a buyer for $120? So this means this becomes the fair value,
Mhm.
right? Okay.
Right.
So, okay. So perhaps you are basically confused here because this also is taken on December 31st, right? And this
Right.
also is happening on December 31st. So if I delete this and directly say that 120 is the value, from 100 it has become 120. Now can we pass the entry? Forget about this one. Isko chhod do.
Mhm.
Because $10 is not my realized gain. How much is the realized gain, Sarthak?
$20.
So let me first pass this entry. Make my investment to $120 first. Okay.
Okay.
Investment value increase to $120. Sorry. Increase it to $20. Transfer it to OCI if this is unrealized. And when I have finally sold all this, my investment is already showing up. If you make a T account, ledger account, how much is the value of your investment now?
120 in the
Now it
books.
is showing at 120. Now
Yes.
I credit my investment, debit my cash by 120,
Yes.
Right.
right?
But the problem is that why we are doing it with $20? We should do it by $10. No? Investment debit $10 to OCI
Nay,
$10.
now I have removed that entry. Completely I have
Okay.
removed that entry. No? I have removed this $10 entry.
Unrealized gain. Okay.
Now I
In
have
between.
removed this entry. Now, in fact, if I remove this entry, I can remove this OCI also because on this date, I'm actually realizing the gain.
Selling. Yeah. So directly we can sell it to.
Directly. So if I've removed this entry, then I can remove this also because in between that fluctuation is not even happening. However, if I change the date, let me just change the date. Okay. And okay. Pura fir se batao. Let me change the dates again and
Let's put
understand if
all. Yeah. Put all
the
the three
fluctuation
scenario.
is happening. Yeah. $100 purchase.
Yeah.
So on this date, my investment value is $100. ठीक है? Bank account gets credited by $100. Fine.
Right.
Now on December 31st, I have not sold it year one. My value becomes 110.
Yeah.
ठीक है? We will go beyond this year now in this example.
Right.
Stay attentive. My investment has gone up by $10. My OCI gets
OCI.
credited by $10.
$10.
Sarthak, understood?
Yes, this is the unrealized gain.
This is the value of unrealized gain. Right.
Okay.
Now, January 31st, year 2. What is the entry? I am selling it now.
So we can do either 2 entries or 1 entry.
Yes. So if you pass that first entry wherein you increase the value of an investment, you can do that. Okay. However, the entry that Sarthak had passed was not incorrect, but in that case, we will have to pass 2 entries in the income statement to transfer the realized gain there. Right, Sarthak?
Okay.
Now, in a task-based simulation, let me first complete this. So how much actually have we or should we increase it by? Should we increase it by $10 or should we increase it by $20?
10.
10.
Everyone says 10.
Yeah.
I am transferring it to OCI first.
But why we are
Yes.
doing this
My question is
to
also same.
OCI?
Why we are transferring to OCI?
Because
Yes.
I
In
want
fact,
to
we should.
pass only one entry. Total $20 I want to transfer to
No,
my
but
income
right now
statement.
we are
Now,
realizing.
okay, just give me a minute. Now, if I am transferring first to see, this is all happening on the very first day. On the very same day when I'm selling it. So I'm first transferring it to OCI and then I'm reversing this OCI by $20. Why? Because I want to transfer in one entry itself the
Realized.
entire amount which is realized.
So first we send transfer to unrealized, then all 20 transfer to realized gain.
To realized because I want to pass only one entry. Now here is what I want to tell you. This entry is correct. The entry that Sarthak initially said that, we will directly transfer only $10. That entry is also correct. But in that particular case, what you will need to do, you will pass a reversal entry.
Gain on sale to
differently.
OCI.
Yes.
From OCI to realized gain the
Now,
$10, right?
On a task-based simulation, depending on how they have framed and how they have given the table, you have to decide that which entry is required here. I am telling you both entries because any might be needed depending on the space and the table that they have given. So you
Okay.
should be aware of the different types of entries that may be asked to be passed.
That $20 entry we are going to pass on January 31st.
Yes, because on this date you have realized this amount.
Okay.
If you are making your income statement on this date, in the income statement, you will not transfer this 10. This will only go to OCI and close your income statement, comprehensive
Right.
income. But in the subsequent period, when you sell this gets transferred from OCI and becomes part of your income statement, but in the next year.
So Bhavna, here are 2 ways, right? First, either transfer $10 on the date of sale to OCI, or either transfer $10 directly to realized gain, and whatever we already put in unrealized gain, just reverse that entry to income
Yes.
statement, right? Okay.
But I
say
I personally prefer this entry more if there is a choice
Okay.
given. The reason
Uh-huh.
being because I want to show the increase in the investment value.
Investment.
And then I
Okay.
want to decrease it. Because if
Mhm.
I make a T account of the investment, okay, investment
Right.
is a debit account. So initially this was 100. Then I increased it.
Right.
Sorry.
By 10, then 10.
So I have a total of 120 then.
Okay.
Right? So I prefer passing this entry over any other entry because this gives me a better idea. But again, it absolutely depends on your requirement which is given. And your requirement will not be mentioned in the words. You will have to figure out from that table. So if you go back after the class, just take a look at the first task-based simulation. I'm sure all those who already have Becker, they would have seen this kind of task-based simulation. So they will provide you one table, and in that table, the full journal entry columns will be given. On the left side, the particular column, on the right side will be debit credit entries. Okay, so if they have given you enough number of columns, that means they might even write these numbers. So definitely if they have written these numbers, this entry has to be passed first. However, if they have written that $20 thing directly, that means you don't have to go through all these entries and pass the consolidated one. Again,
I
yeah.
still have one doubt. Like when we are going to sell this investment on January 31st, so we also have to pass an entry for selling this investment. But I think it is missing.
Investment is credited. Yeah, here I have not passed because we were discussing some other entry, right?
Oh,
So if you
yes.
pass that, your bank account gets debited by that amount.
Okay, then bank to investment, correct?
Bank to investment. This was originally passed, right? Bank or cash, whatever.
So how did I balance my OCI account then? It should have zero amount, no, then at close of
See,
the.
OCI does not get balanced till your investment. Say, for example, in the OCI, you have about 4 or 5 items. At least some of the items will always remain in the OCI. So it is not about balancing. Okay, only the total of the OCI gets transferred to the accumulated other comprehensive income. It is not like a debit or credit in the OCI. You just take a total of it, the net amount, okay, and transfer the net amount to the accumulated other comprehensive income. And whenever there is a readjustment that has to happen, you reduce it from AOCI basically. Because you would have transferred, say, for example, if in this year end, year one, this is the total amount that you had in your OCI, right? You transfer this entire amount to AOCI. Correct? Now, in the
Okay.
next period, when the security is getting sold and you are transferring it back to income statement. So what you basically do, you are not touching this OCI at all. I will then write AOCI because this amount was already transferred to AOCI and this was closed there. As you close your income
Okay.
statement when you transfer it to retained earning.
So we are transferring to OCI on the date of transactions, right? But transferring to AOCI is the year-end task.
Yes, yes. So once the year gets over, whatever amount is there, debit and credit, whatever the balance of the net amount remains, gets transferred to AOCI. In my example, there are no other entries. So this
Right.
entire amount gets transferred to AOCI. So how do you pass that journal entry for AOCI? Indu, let's pass
Yeah.
the entry.
So OCI account debit to AOCI.
Yes. So that's the only way to transfer this entry. Anyone has a doubt
Right.
in this? I had
No.
only this much amount and I transferred it to AOCI just the way I transfer my net income to my retained earning.
Mm-hmm.
Now this is closed for the year. Because
If we have only this transaction, suppose we have nothing else in AOCI, so it might be zero out, right?
Yes, if there
When
is
we
nothing, then it will be zero.
okay.
Then it will be zero. And then finally, when I pass this entry, what will I do? Because now I'm basically doing what? I'm routing it back to the income statement. And from income statement,
Right.
it will go back to the retained earning.
Mm-hmm.
So that's the route that we are following. So from
Right.
AOCI, another entry that I'm passing is AOCI account debit, $10. To what is happening? To income
Income
statement.
statement.
$10 or because I had a balance of 20, so I'm transferring 20.
Mm-hmm.
Back to
So can they
statement.
ask the entry on the date of transaction, or they can ask us to pass the entry year end as well?
They
Both,
can give you anything.
right?
Just read the question carefully. On what date are they asking the entry for? If they're
Yes.
asking you to prepare a financial statement, then it will be year end only.
Year end. Okay.
But then during the year, whatever transactions they have made, if some adjustments are needed at the year end, those adjustments you will have to make.
Right.
Pass those entries that they forgot to pass during the year, that they may ask you to pass at the year end. So
Mhm.
those are called as the adjustment entries.
Okay.
Any doubt in this, Sandhya? Finding it confusing?
Yes, ma'am.
Yes.
What part? Tell me. Okay, let's sort this out. AOCI part?
Like,
Yeah.
Yes. Why
I want to
we have
confirm one thing.
passed?
Actually,
Sorry?
my AOSI, when I sell this investment, AOSCI should also have zero balance then, right?
Okay, you tell me one thing. In the income statement, is there only one component? Income statement has multiple items, right? You
Right.
have many types of revenues, you have many types of expenses, many types of gains and losses, right? Right?
Yeah.
Similarly, in the OCI, OCI is composed of what all different items?
Of
I think these are the items that we read yesterday.
yeah.
Okay. There was, however, one more that I told you is included.
Yeah.
Okay. Yeah.
Okay.
Pension adjustments.
Lohit,
Okay.
क्या है ये first वाला? Why did this happen? Up and down in the valuation, estimation, actuarial valuation going up, actuarial valuation going down. The income statement will become volatile. I don't want to do that. So I've transferred it to another statement called OCI. Correct?
Mhm. Right.
This OCI, if there is a gain, this will show a credit balance. If there is a loss, it will give me a debit balance. All of you, Sandhya, in sync with this?
Yes, ma'am.
Okay. What is the second line item here?
Unrealized gain.
Realized.
Unrealized gain or loss on
Available for sale.
available for sale debt security, right?
Yeah.
Ma'am.
This is what we were doing. What is F?
Foreign
Financial
exchange translation.
Foreign exchange
Translation.
Translation.
So translation is basically when you are converting your subsidiaries' financial statements in a different foreign currency, merging it with your own, right? So whatever
Right.
exchange differences arises, difference between your currency and your subsidiaries' currency, you merge it together, right?
Mhm.
And that is where the gain or loss may happen. And this is transferred to OCI. Why it is not that gain and loss transferred to income statement? Because you are still the parent, the other party is still your subsidiary. Next year again, when you merge, it will lead to some gain or loss. Then why to just let it happen continuously? Finally, when you sell off that subsidiary, whatever gain or loss happens, that we will transfer to income statement. But during this entire period, let it just remain in OCI, because every single year this fluctuation has to happen. Correct?
Right.
Right or not, Sandhya?
Right, ma'am.
Okay. What is another F?
Cash flow hedges.
Huh?
Cash flow hedges.
Cash flow hedge. Cash flow hedge, that means we are talking about a derivative transaction. Okay. Again, let's not pick up another topic which is confusing. We will talk about it later. This we have to do. But this means that you are talking about a transaction which you have hedged, where you anticipate some loss coming up in the future. You think that I have to buy some items in the future, but the price of that item in the future might go up by $100. So should I lock in the price today itself? Say, for example, today's price is $100 but my anticipated price after 6 months when I actually go to purchase will become $200. So let me get into an agreement with that supplier that he will after 6 months give that item to me for $100 only, because I'm anticipating the price will go up. If the price goes up, I will have to give more cash to procure that same item. So I lock in the price today. So that contract between you and the other party is called as a cash flow hedge. This contract can be in the form of your options. This can be in the form of your futures, your forwards. These are the derivative terms. Option means that I have a right to purchase from you these goods at $100 after 6 months. So this is a contract which is different from the actual sale purchase contract. So that actual contract is the real contract, which is called as the physical contract. But here the hedging contract is just on paper. So you have gained $100 in this. Tomorrow, if the price actually goes up from 100 to 200, you will book a hedging gain of $100, because what? Others in the market are buying it for $200. You will buy only for $100 and sell in the market for $200. Immediately, you will make a gain of 100. So that gain you book under hedging. Okay, and therefore this should not enter your income statement. This should be reported under your OCI. This part is clear to you all or not? Hedging is only on paper. It is different from the actual transaction. Okay, this is just like cricket betting. Okay, so Sachin Tendulkar and let's say Rahul Dravid are playing. Okay, now there are two people sitting in the stadium and they are betting Sachin Tendulkar. If he hits 6 on the second ball, then I will get 2,000 rupees from the other party. Now Sachin Tendulkar and Rahul Dravid are not even aware that somebody is betting on them, on their behalf. But if he hits 6, Sachin Tendulkar hitting 6, this person is getting richer by 2,000 rupees. So that 2,000 rupee is the other contract and the actual players are Sachin and Rahul Dravid. Different. This is booked on income statement because that's the real transaction that has to happen. Now this is driven because of this price going up and down. It derives its value from the other item which you are hedging. That's the basic concept of hedging. It is not taken to income statement if your cash flow you are protecting with the help of another transaction. Sandhya, how difficult is it to understand? Sandhya.
Yes, ma'am.
How difficult? Very difficult.
No, not much.
Not much. Payal.
No.
Sarthak.
I got it.
Sorry?
I got it.
You got it? Right. So this is basically hedge is nothing but a contract on paper. Okay? That will help you save your money when the prices of the other item go up or down. Now, the last item is again related to your income statement. This is your related to financial instrument. What in the financial instrument? Now listen to this carefully. This is basically fair value change of a financial liability. Okay, let's only understand this logically. What happens is when the value of your liability, okay, changes, there can be enormous reasons because the value of your financial liability. So financial liability, let's say for example, you have issued bonds. You are the issuer of bonds. Okay. Listen to this very, very carefully because this is part of your syllabus in financial instruments covered under bond accounting. So here is one company, ABC, need of money. They issued certain bonds. Some people have given money to the issuer ABC, and in return, they have got bonds of this entity. Okay. Now the bonds will give interest for next 10 years because the maturity period is next 10 years. Lohit, are you with us?
Yes, ma'am.
Okay. So let's say, for example, on the date when this is issued, the interest that this entity ABC has promised is 6% paid semi-annually, but this 6% is per annum. So semi-annually is 3% paid, right? Now what happens? This issuer's name is ABC. All of a sudden, the management has changed. They are not able to take care of the entity, and the market value of your ABC Limited has gone down. People now do not trust ABC at all. Now the lenders, poor lenders who have given money to ABC, now they fear, I don't know whether ABC will repay our money or not. So because of that fear factor, now ABC is losing its credit worthiness in the market. How will ABC get more investors in the market? What does your logical brain say? If I want to sell my product, which is really, really poor, I will have to give some sort of temptation to others. I will
by
have to
providing
maybe
more interest.
Sorry?
By providing more interest on the bonds, then
So
the
I did
investors.
what? I increased it from 6 to 7%. Okay. Now, when you increase the interest from 6% to 7%, actually, that fear factor is the reason why you have to increase the interest. The value, fair value, which is completely based on the market sentiments because you have done extremely bad in the market. The fair value of your bond, the credit rating, does it not go down or not? Does it not go down or not?
Yes, it will.
It will go down. Now let's pass journal entry to explain this. Can we pass journal entry? Yes, we surely can. Because this journal entry is the base that will come here. How this is happening, let's understand logically. Chalo, journal entry pass karte hain. Fair financial liability or my bonds today issued. Okay. The fair value of my bond. I got money from the other party. $10 lakh. Okay. And these are the bond payables. Okay. This is my liability. Right. Now, this represents the fair value or the market value. Do you all agree? This is the money
Yes.
that I got from my
Yes.
people. That means they agreed to pay me so much money.
Yes.
Now they are willing to pay me money only when I increase the interest. The market sentiment is such that the credit worthiness of my entity has gone down.
Right.
So that means the market value also has gone down.
Go down.
The market value has gone down. The instrument which originally costed or which had a value of say $1,000. Okay, these are the number of 1,000 is the number of bonds issued, and this is the value 1,000 is the value of per bond. Okay,
Per bond.
now when the market value has gone down, the liability should get debited or credited. The value of an
Debited.
debit kar do
Yes.
Yes.
by some amount. Let me write 50,000. ठीक है, अब क्रेडिट क्या करूं ये बता दो.
50,000 loss. Okay. OCI.
OCI क्यों?
Because this is not real, like of unrealized loss or gain kind, right? This is not impacting our income statement.
चलो इनकम स्टेटमेंट को डालो. इम्पैक्ट क्या होगा? रिटेन्ड अर्निंग. इम्पैक्ट
Yeah.
क्या होगा?
Will
Dividends will
decrease.
get declared.
Mm.
You are taking advantage of your bad credit worthiness and declaring it to your stockholders.
No, no.
Incorrect है?
Yes.
Mm.
क्या करना चाहिए संजय?
CI, I believe.
Logically क्या कर लें? So we need a way to pass an adjustment entry here so that this does not get distributed to my shareholders. Let me just transfer it to OCI. And the accounting standard says that even if this bond is repaid at the time of maturity, do not recycle it to income statement ever. Once in OCI because of your bad credit worthiness, let it always remain in OCI because of your credit worthiness. This is what is the meaning. So that means any fair value change in the financial liability, which is because of your downfall in the credit worthiness, should be transferred only to OCI and never ever to income statement. Rest of the things can be transferred. Like say, for example, I said that when the foreign subsidiary is sold, whatever is the remaining gain or loss, somebody needs to turn off the mic. Somebody needs to turn off the mic, please. So whatever is the gain or loss outstanding on the date of ultimate sale of your subsidiary, it is okay, you can transfer it back to your income statement. Similarly, when I pass that entry for unrealized gain or loss on the available for sale security, it is okay at the time of ultimate disposal of that security, you can transfer it from OCI, which is transferred to later AOCI. You can transfer it back to income statement and bring it to retained earning, make it available for distribution for dividends, but not a case like this ever. Have we got this or not? Payal,
Yes, ma'am.
have we logically understood this part?
Yes, ma'am.
Okay. Now, संध्या, आपको एक क्या इशू आ रहा था अवेलेबल फॉर सेल सिक्योरिटी में?
Ma'am, now it is cleared.
Available for sale security, as long as you are holding it, this is an unrealized gain or loss. As long as it is not realized, it is not okay to transfer to income statement. We park it temporarily to OCI. The total of OCI at the end of the period, which consists of all the items that are there, if at all there is a transaction in one of these, you transfer to OCI. The total of this goes to AOCI as you do in case of the retained earning, right? Income statement में जो net income होता है, okay, this is debited, transferred to retained earning. That's how your retained earning keeps increasing. Similarly, in case of OCI, whatever is the balance, gain or loss, which means debit or a credit, this finally goes and sits in the AOCI. Where is this presented? On the statement of changes in shareholders' equity, called as SOCI. The total will remain there. But yes, subsequent adjustments are always possible. As in case of retained earning, when dividends are declared, it is adjusted up and down. Similarly, in case of AOCI, the factors that affected this, when they are sold or when there are any readjustments required, you pass an entry in this. This is only for 1 year. only for 1 year. As income statement is for 1 year. Retained earning is the accumulated earnings that are realized in most of the cases, while AOCI is the accumulated unrealized earning. When it is realized, it gets transferred back to the income statement. What is the entry that you pass? Then you debit your AOCI and credit your income statement. Anytime you are crediting the income statement, you are increasing this. Anytime you are debiting AOCI, you are decreasing it. Very, very logical to think. I know these are the new terms for you all, but the study is absolutely logical. Like, for example, see, sometimes the literature may not clearly tell you that, all of this is happening and why the up and down in the market is happening. But when you try to pass a journal entry and try to relate it along with, you will get an answer. Sarthak,
Yes.
an honest opinion on this?
Yeah, I understood it.
Everything, Lohit?
Yes, ma'am.
In case of
Everything should be
like
clear.
Yeah.
one entry also we can write in case of unrealized loss, we have to debit the accumulated other comprehensive income and credit the gain on OCI.
Yes. If it is only for that period. Yeah.
Yes.
If you are talking about accumulated other comprehensive income, that means you are talking about an adjustment happening from the balance sheet itself. Right? But if you're
Correct.
talking about that one
Yep.
particular year, like the example that we took earlier, okay? So this
Yeah.
security originally costed 100, but later the value decreased to 90. So what is the journal entry that you would pass here? OCI account debit, $10 to investment, because the value of my investment in bonds has decreased by $10. So on a T account, which is the investment account, what is now happening is, originally the value was 100 when I purchased it, but because now it has suffered a loss, the value has gone down by $10. So the closing will be only $90. Right?
Yes. Got it.
And then this debit in OCI, if this is the only item and we do not have anything else in Puffy, gets transferred to accumulated other comprehensive income and shown in the statement of SOCI. Sumanta, where are you today? Sumanta?
Whether it means in.
Understood, not understood?
Yeah, understood.
Good night तो नहीं हो गया तुम्हारा?
No.
Sure?
No.
Okay. Now, Sanjay,
Yeah.
how is it going, dear? Very bad?
Good. No, good, but yeah, heads is spinning.
Your head is spinning, huh?
Yeah.
Early morning for you.
Yeah.
Tylenol
And like
follow.
yesterday night also, like I slept at 1 and then wake up at 5. So it's just
Yeah.
4 hours sleep.
So,
So that's, yeah.
yeah. So, you know what? Okay. So this is already 8:42. You know what I was about to discuss? Okay. Then we will discuss that in WhatsApp group. If you want, we can change the timing little bit, because, there is one more participant who wants a change in the time.
Yeah, if you can make it at 5 o'clock, that would be great.
5 in the evening?
Evening, yes.
Yeah, so that we can do. We will use our WhatsApp group for this. Okay, let's not.
Okay.
Let me just try to wind it up.
Yeah.
See, the first few sessions are foundation building sessions. Herein, I'm introducing many new terms, many new types of journal entries, new types of financial statements are being taught to you. So it does take a little bit of time. Okay, so I do not hurry up, at least in the first few classes. But when I now go back to financial instruments and I start talking about financial liability, and why is this risk not transferred or the loss not transferred to income statement, every one of you should be already aware of it. Okay, because that's why I'm spending so much time right now. Okay, so you can please go through these statements at home. I think most of you have already gone through. The ultimate idea here is that whether you are preparing a single step income statement or you are preparing a multi-step income statement, your answer should remain same. So net income in the values that I have taken here is nil in both cases. Okay, so that tallies your answer. That means everything is going fine here. All right. So a multi-step income statement is a lot more easier to understand. Here is just one more example of it. You can just read through this. Okay. So here, just this, what is different here is the EPS that they have given. EPS will be covered later. Now, all of this I've already explained in great detail. What are selling expenses? So please read through. Okay. If I'm scrolling through does not mean that you are not already aware of this. I've explained all of this. Now, there is an important exam tip here. There are some types of questions. Now, this is a different question than OCI and what we have already covered. But this is a commonly tested question on your exam. And in very recent exams, this kind of question has been tested in as a task-based simulation. Okay. So this is what you can actually expect, and it will not go more complex than this. Now, what is happening? Let me just tell you. If you are talking about COGS, because that's also one of the line items of your income statement. Did I tell you this chart? You have direct material, this flow chart. Did I make this yesterday?
No.
Okay. You have direct material, you have direct labor, and you have factory overheads. Okay. Now, what happens is this direct material and direct labor, these are called direct because you can directly trace the cost of these items in the product that you are manufacturing. Okay. So, for example, if I'm making a couch. Okay. Now, what is the direct material that is used for manufacturing a couch? Sanjay, I know your head is going round and round, but let's interact 5 minutes more.
Okay.
संजय,
Yeah.
so US में जो couch आप खरीदते हो, what do you think is the direct material that they use?
Wood, cloth.
Wood,
Yeah,
cloth. Okay, maybe some nails and springs
nails.
be there,
Yeah.
right?
Mhm.
And
Some forms, if it to
some
fill.
foam. Okay,
Yeah.
right. So these are the items that you can directly trace to this manufacturing of a couch. Now the labor who is working on this, maybe 2 people work on one couch, and in 2 to 3 days time, they are able to make this entire couch. So whatever payment is being made to these workers for these 2 or 3 days, you can directly relate to that one couch that they are manufacturing. Right or not, Sandhya? Sandhya? Sandhya,
Yeah, ma'am.
कहाँ गए?
Ma'am, I'm here only.
Okay, so I didn't hear you. Okay, so you can directly trace the wages that you are paying to the labor who is involved in the manufacturing of that couch. Can you do that? So maybe on a per day basis, I'm paying them $10 each. Okay, 2 people are working for 3 days. How much does that make? $10 paid to 2 people for 3 days.
60.
So that means the direct labor is $60. That's the cost of the labor that I'm paying, and it is included in the cost of that couch. Direct material, whatever that is coming. Let's say, for example, this is costing me $100, right? These are the items that I can directly trace to the manufacturing of the product. But as I mentioned, supervisor's salary. Okay, now there is one supervisor for the entire factory. He's just not overseeing one person. He is actually monitoring many other people who are working on that same floor. So we use some basis to allocate the amount which is paid to the supervisor. Let's say, for example, if we are paying him $5,000 on a monthly basis, then we will distribute this to every single couch which is being produced during this month, and on that basis this amount will be included in the cost of that couch, because that's the ultimate goal of management accounting. They provide data to the accounting team, because accounting team needs it for the purpose of valuation of inventory and also for the purpose of COGS, right? Now, in addition to this, we also did several other expenses like depreciation. Okay, remember, any expense which is related to factory where the production work is going on, okay, that's called as a manufacturing or a factory overhead. And because it is not directly related or cannot be directly traced to the production of one single item, as you can do in case of direct material and direct labor, we call it indirect expense. Indirect expenses are allocated on some reasonable basis to each of the products that are produced, which means supervisor salary, which means depreciation, which means insurance, factory depreciation, which means your rent, factory rent, which means any other expense, maybe the watchman's salary, okay, for the entire factory. So you sum them up. Let's say, for example, this works out to $10,000 for the entire month. Now, in 1 month, if I'm manufacturing 5 couches, so if I'm using only one straight method of it, so I just divide it by 5. Okay, and let me say 5 is really very, very less. Let me make 10 couches in a month, because that is what I've taken here. Okay, so $1,000 per month should be allocated to each couch. So if I'm talking about couch 1, couch 2, what will be the product cost of this couch 1? Direct material cost will be $100, direct labor cost will be $60, and factory overheads will be $1,000. You sum them up. How much do you get? $1,160 is the product cost. Okay, this is your inventory cost until it is sold and until the time it is in your factory. This becomes your inventory, your current asset on your balance sheet. But on the date you sell it, okay, what is the journal entry that you pass? Your COGS, which is an income statement item, gets debited by this amount, and your inventory is credited by this amount. Are you all agreeing to this treatment or not?
Yes, ma'am.
Yes.
Correct?
Yes.
Yes.
So this is my income statement. That's why it is so important to get to the correct value of your inventory. Now, the questions that are asked on a CPA exam might be of this type. As they are asking earlier, this portion was completely included in completely included in bar. But now a portion of this they have shifted from bar, and now they have started testing on FAR. Why? Because the income statement is basically part of it. Now what happens is, these two items, I'm erasing all of this. Okay, let me just erase completely and then I can write again. Remember this chart always, and you will never ever go wrong, because now I'm using the technical terms that are asked on exam. Oh, written it incorrectly. Okay. So this is the direct material. Make a chart like this yourself also so that you remember. And you have your factory overheads here. Okay. Manufacturing overheads. These two items together, sum total of them is called as prime cost. Okay. Sum total of direct labor, I'm scared to draw here, and factory overheads is called as conversion cost. So when you put direct material, direct labor works on it. With the help of all the expenses that you incur in the factory, you convert this direct material into finished goods. And that's why the sum of direct labor and factory overheads is called as conversion cost. The sum total of direct material and direct labor is called as prime cost. All of them together, they comprise your product cost. Product cost is inventory cost or the value of inventory. Okay. And this remains on the balance sheet until it is sold. Okay. Once it is sold, the product cost converts into COGS. COGS is again, it is a product cost, but now it is charged to the income statement. So from balance sheet, it comes to your income statement and charged. So all of this is the flow. Do not ever forget this flow. Are we all comfortable with this?
Yes.
I'm sure that
Yes.
you all have already read this somewhere in our cost accounting. We have read this before.
Yeah, in the cost accounting I have read.
Yes. So this is just a repetition of it, okay, what we have studied. Now see, here is a question. This is an indirect question and it is a complex question, okay? So understand this requirement very, very carefully. What type of questions are they asking these days? Cost of goods sold equals purchases for a retailer or the cost of goods that are manufactured for a manufacturer. This need to be adjusted for changes in the finished goods in inventory, and this is calculated as follows. Cost of goods manufactured, that means whatever is the cost of goods that you are manufacturing during the period, not sold. It is ready, okay, for sale. This equals the period's manufacturing cost, which should be adjusted for changes in the WIP. That means opening WIP and closing WIP need to be adjusted. This also may be stated as cost of goods sold, which is adjusted for changes in the finished goods of inventory. Here is an example to understand both these points because these are now commonly tested questions. So we have to do this. Just read this part, opening inventory of raw material purchased during the period, closing inventory of raw material and WIP of raw material. The requirement is that you have to calculate the conversion cost. Lohit, what is the conversion cost? Lohit.
Yes, ma'am.
Where were you?
Here only.
Yes, Lohit. What is conversion cost? Are you watching a movie today?
No.
Then, okay. See, earlier also, I think you took a break before 6:30. Sandhya, what is conversion cost?
Direct labor plus factory overheads.
Very nice. Okay, Sandhya, are you in Lohit's group or some other group?
In my
Ma'am,
group.
material, direct labor and factory overheads.
Factory overheads. Yes. Loher, you are in Sarthak's group, huh?
Yeah.
Yes.
Yes, Sarthak. Okay. So I think you need to keep a really good eye on Lohit.
Sure,
Rohit,
I will.
you have not been attentive in the class today. All right. So the idea is now, or the agenda is to calculate the conversion cost. That means I need direct labor. Now, Sandhya, just read this data that they have provided. Have they given you any data that can help you actually calculate conversion cost? Of course, yes, we know what the formula is. Direct labor and factory overheads.
Factory
But
overhead.
have they given anything related to those terms that we know or we are aware of?
No.
No.
Opening inventory, raw material,
No.
closing inventory, WIP, COGS. हाँ, COGS तो थोड़ा बहुत पता है ना?
Mhm.
What is COGS? COGS is the ultimate cost of goods that is sold.
We are
Which
selling, yeah.
consists of basically the product cost.
Mhm.
Okay, so this is what I have sold. This is the opening finished goods. That means in my factory, I already had those goods ready. Out of this, something else was also added during the period, which is the cost of goods manufactured. Listen to me carefully. I already had opening finished goods inventory with me. On top of this, something was manufactured during the period that came to my factory, and then ultimately I sold something, right? This is what is finished goods still remaining with me. This is what I have sold during the period. Only this data. Is this good enough to calculate the conversion cost? What is your opinion? Yes, it is good enough. We will
We
calculate.
can remove the material cost from this, right?
Remove the material cost, मतलब remove तो कुछ भी नहीं होता. Don't use that data if you find it irrelevant.
Like my remove means we can deduct those parts. The total cost minus the
So
raw material.
basically what I'm trying
Prime
to tell
cost.
you is that we start from the bottom.
Right.
And what we try to do, look at cost of goods sold. Cost of goods sold means that here we need to, in this opening finished goods, add something.
Mm-hmm.
And what is that add something? Add something is the cost of goods that have been manufactured during the period and are available for sale during the period. Sum them up. That means this is the total goods that are available. Let me just write it here so that, because writing makes it easier. I already had opening finished goods. That means ready for sale. Okay, with me, some amount. Add to this goods that are manufactured during the period, right? Right or not?
Yes, sir.
Yes.
तुम लोग नहीं पढ़ोगे तो क्लास बंद करो.
नहीं.
Goods manufactured during the period, right?
Right.
So these, can I say, are the goods that are
Available
for sale during the period.
Right.
Out of this, the closing finished goods is what I still have in my factory. That means I have not sold. I
Right.
had these many goods available for sale, but 2 goods I still have. That means मैंने कितने बेच दिए?
Right.
I have sold 2 goods now. So that's the cost of goods sold.
Sold.
अब ये वैल्यू दे रखा है मेरे को.
Mm-hmm.
ये वैल्यू दे रखा है. They have also provided me this value. Now what I need here, there are 2 blank items. So that means I need to calculate this. Once I have calculated this, I will get this also.
Mm.
And once I have all of this available, I will just do the back calculation and I will reach to my conversion cost. Because cost of goods manufactured का मतलब है कि somewhere it has direct material, it has direct labor, and it also has factory overhead.
Overhead.
मटेरियल के लिए मेरे को ओपनिंग दे रखा है, क्लोजिंग दे रखा है, सो दैट मीन्स कितना कंज्यूम हुआ है ड्यूरिंग द पीरियड कैन बी कैलकुलेटेड.
Yes.
Yes.
And once I have that amount, I will have the total amount which is going in the production or the product cost during the period निकल जाएगा. You reduce this material cost, what you finally get is conversion. So that means reverse calculation has to be done. Logically सबको समझ में आ गया?
Yes, ma'am.
Yes.
Yes.
लोहित को
Yes.
नहीं आया ना?
I got it, ma'am.
पक्का?
Yeah.
Now you tell me, Lohit. What is conversion cost?
The rate which is
Lohit, क्या हो गया
taken,
भाई तुमको? वो
yeah,
right?
taken to convert raw materials into finished product.
हाँ, so this is the formula here. Because on the raw material, direct labor will work and I will incur some expenses in my factory to convert that raw material into finished goods. So that's the conversion cost. So the direct formula is direct labor plus manufacturing overhead. Right? So what we are doing here, basically we have cost of goods sold available, and I just told you that using this one value of cost of goods sold, we will do the reverse calculation. Are we ready to do the reverse calculation? देखो यहाँ से हो रहा है, which is given in step number 3. So what we have is beginning stock of finished goods, which is $1,200. देखो, it is given here. $1,200, right? Then what we have is beginning में we have to add the cost that we have incurred during the period. Okay? So that we get the total cost of goods that are available for sale during this period. Right or not? I have just shown you all of you. Now, this is the cost of those goods which I have ready in my factory during the period available for sale. Out of this, I still have inventory of finished goods which I have not sold during the period. So that means what I have sold during the period is this. And this is given in the case facts. This is the information already supplied to you. Reverse calculation करना शुरू कर दो. इसी तरह के क्वेश्चंस आएंगे टास्क बेस में. So $1,200 is the information given. Less ending inventory of finished goods, which is $1,400. Correct? Now, these two information will not be given to you. It has not been given to you. But this finished goods opening inventory has been given to you. So that means in this entire calculation, I need to calculate at least the cost of goods manufactured, because only this can help me arrive at the conversion cost and nothing else. मेरे पास में ये भी नहीं है, मेरे पास में ये भी नहीं. Then how do I calculate this? That means I will have to get this number from somewhere. कैसे लाऊं मैं? I will have to go to the previous steps. Cost of goods manufactured. Sarthak. How do you calculate the cost of goods manufactured? यानी कि what is the cost, or how do you calculate the product cost? You basically need raw material.
Just a second.
You need raw material.
Yes, raw material.
What else do you need? So when I say raw material purchased is enough? Or should I say raw material consumed is what I need?
Consumed during the year.
Consumed during the period. Then Payal, what is the second thing that I need?
Direct labor.
I need direct labor because I am now calculating the product cost, right?
Yes.
And then what is the third thing that I need?
Factory
Factory
overhead.
overhead.
Factory overheads.
Factory overheads. But out of whatever data which is given to me, do I have anything available?
Cost of goods sold.
We
Cost
have
of goods
the
sold जो है मेरे
open
पास में.
we have the opening raw materials.
We have opening raw material, but opening WIP भी तो दे रखा है. Opening WIP means on some
Yep.
goods, work was already in progress.
Yes, but
So
I think it
on
is
that
zero.
work which
Yeah,
was in
opening and
progress,
closing WIP is 0.
all the goods on which work was already in progress, all those goods also got completed in the current period. That also should be added to the cost of goods manufactured during the period or not,
Yes.
right?
Yes.
Should it be added? But
Yes.
that number is 0.
0, yeah.
So that means there was nothing in progress at the beginning. So after all these things are added, I will finally get the cost of
COGS.
goods that have been manufactured
Manufactured.
during the period. But I also need to reduce from this the closing WIP to calculate the right number. Why? Because this
They are not.
out of whatever was in the manufacturing process or on this work was completed, I still had few goods or few units on which the work was not completed 100%. So I take 100% completed units or completed work. This gives me the actual cost during that period of the goods manufacture. Let me just calculate. So if I have this thing also 0, I have to calculate the conversion cost from the back working. I will calculate this. Let me take you back to that calculation because I do not have the numbers available. Okay, so the first thing, Sarthak,
Yes.
raw material consumed. Do I have that?
Yes, we have.
Where?
Can I see the question?
Raw material opening, raw material purchased during the period, closing inventory of raw material. Can we calculate the raw material consumed during the period?
Yes.
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 Yes,
How?
opening minus.
Opening,
Opening
closing,
plus
purchase
purchase
minus
Plus
minus
purchase
closing.
minus closing.
So, Payal, what is the total that you are getting?
57.
$5,700.
5,700?
Yes.
Yes.
Is this step number 1 for us?
Yes.
Use this 5,700 here. This is what we have to calculate. Why? Because this, I need cost of goods manufactured to place here.
Right.
Right? So therefore, I will take the raw material from here, place this value here. Sandhya, Payal, are you all with us?
Yes,
Yes,
ma'am.
ma'am.
Are we able to get it?
Yes,
Yes,
ma'am.
ma'am.
Okay. So my beginning WIP was 0. So that means at the beginning of the period, there was absolutely nothing on which work was performed last period. So I had a 0. But during this period, when I started working, the raw material that I have used to in the production is 5,700. Okay. I have to add the conversion cost. Then I will get the total manufacturing cost. Out of this total manufacturing cost, whatever is the ending WIP which is in progress will be reduced.
0.
Then I will get cost of goods manufactured 100% of the cost of the goods that have been manufactured during the period. Okay, so let me put 5,700 here, whatever I'm able to get. Okay, then you put this 5,700, what you get is, this is the plug-in figure, okay, that you finally get. So I think do we have cost of goods available for sale? Exactly. Okay. So this is the first thing that you basically calculate. From 12, when this 12,000, you add 1,400, what you get is 13,400. From 13,400, when you reduce the opening finished goods, what you get is 12,200, which is the cost of goods manufactured, which is the plug-in value. Take this 12,200, put it here. Now do the reverse calculation. 12,200, add this, what you get is 12,200 again. Okay? Now do this as a plug-in value. How do you do this? 12,200 minus 5,700 will give you 6,500. So you
Right.
will not get a breakup of direct labor and overhead applied, but you will get the conversion cost which is
Conversion cost.
asked of the question. So you basically start from the third step first. Okay? Because the third step will tell you that when you have a beginning finished goods inventory, to this finished goods inventory, that means this was already finished at your end. The cost was already ready. Whatever you were able to produce during the period is added. Then what you finally get is the goods that are available in your factory ready for disposal for sale. But out of this, you were not able to sell inventory equivalent to $1,400. Right? So what were you able to sell? You were able to sell 12,000, and which basically has been given as the case fact. So you do a reverse calculation of all of this, you will get 12,200 as your plug-in value for the cost of goods manufactured. Place this value here, because all these steps you would know when you practice yourself. Sandhya, how difficult is it to understand? Very difficult?
No, ma'am, not at all.
You have to only apply your common sense. This is the heart of it. If you have understood this, then you will do it. If you have finished goods, that means the finished goods opening has to be considered. The cost of goods that have been manufactured and transferred to the factory have to be added to it to arrive at the cost of goods that are available for sale during the period. Out of this, how much were you able to sell? That's your cost of goods sold. Now that has been supplied in the question. Okay. So the third step was, Sandhya, what? Calculation of cost of goods sold. Where did we start from? We started from finished goods. Opening, because this was already lying in my factory. Cost of goods sold का मतलब है what value of goods have been sold during the period. Kavya.
Yes.
Not available, Kavya?
No, I'm available.
But I can't hear
Hello?
you.
Hello.
Yeah, Kavya?
Am I audible?
No, not really audible.
Hello.
Yeah, can hear you. Little bit,
No,
yeah.
I can hear you, but I don't know why my voice is not audible.
Okay. Not a problem. Have you understood or not understood?
Yes.
You have not understood. You have not understood, Kavya? Who has not understood? You have to please tell me. Acha, understood. Okay. Sarthak, is this part clear to you?
Not
Not
much.
really. Okay. So the ask of the question is that we have to calculate the conversion cost. What is conversion cost? To calculate conversion cost, we know that we need direct labor and we also need factory overhead.
Factory overheads.
So even if we do not get a breakup of the two, it is okay. We are able to arrive at one number,
Yes.
right? So how do we arrive at one number when we do not have anything related to it? Because conversion cost is directly related to the manufacturing.
Right.
Right. Now, in cost of goods sold, we can get some idea about the cost of goods that have been manufactured during the period, because when I'm looking at the formula, how we arrive at the cost of goods sold, I will get some idea. Okay. So let's
Yeah.
just break this up again. I'm starting from step number 3. You can call it step number 1. Step number 3, you can call step number 1 because this is the information which has been provided to us. Cost of goods sold is the figure given to us, right? So we have to
Okay.
use this as our base to calculate conversion cost. It has been indirectly asked. So how do you then do the reverse calculation? You take the finished goods. To this, you add the cost of goods manufactured. When was this manufactured? 10 years ago.
No, in the same period we are
During
calculating.
this period. So cost of goods manufactured during this period. Okay?
Yes.
I add that up. When I add this up, what will I say? This is the cost of goods which is available for sale.
Yes.
So many goods are now available for sale. Okay?
Okay.
Out of this, if I reduce finished goods, closing inventory, that means I was not able to sell this. What will I get?
Cost of goods sold during the year.
So, if I put it in terms of boxes, I had an opening inventory of, let's say, for example, 4 boxes. Okay. During the period, I manufactured 3 more boxes. How many boxes are available for sale?
7.
I have 7 boxes. Sandhya?
Yes.
Yes, ma'am.
5, 6, 7 boxes now available. I was not able to sell 2 boxes.
5.
5.
How many
Right.
boxes I have sold?
5.
During the 5.
5 boxes. Easy or not? With boxes, we
Yes.
all can understand, but with
Yeah.
formula, it becomes difficult. With words, we find it difficult. Right? And this
Right.
is what exactly we have written in. So once we have cost of goods manufactured, Sarthak, manufacturing का मतलब हमने तो पढ़ लिया ना. Manufacturing का मतलब है we need raw material, cost
Direct
of the
labor.
raw materials used during the period in production,
Yes.
direct labor would have worked,
Factory overheads.
overhead, right? So that
Yes.
means if I'm able to sum them up, I will be able to get the cost of goods manufactured, but there is an adjustment that I have to make if at all there is opening WIP given and closing WIP.
Closing.
वो तो मुझे adjust करना ही पड़ेगा because this was already in progress.
Right.
Right.
Right? So if I do that same adjustment, I can arrive at my COGS how? Same adjustment ही करना है बस. Now, the second item we will just do it and close the class today, okay? Because people are banging my door also. Now, let's do it here. Sarthak बताएगा. Step number 2 is what? Now I am calculating my cost of goods manufactured because Sarthak वही तो निकालना है हमको.
Yes.
Cost of goods manufactured. How do you calculate the cost of goods manufactured? See, I have
Opening work in
opening
progress.
WIP. Add to
Plus
this my raw material.
raw material
Add
consumed.
to this
Direct
my direct labor. Add to this my factory
factory
overheads.
overhead.
Less closing
And
labor.
या
subtract
फिर
closing work
conversion
in
cost.
progress.
And I reduce from this my closing WIP.
Yes.
And then what will I get? Will be my cost of goods
Goods
manufactured.
manufactured during the year.
ठीक है. Now, because I do not have the cost, the raw material figure also with me, I calculated it, which was easy. You all did that. ये तो zero ही दे रखा है. The closing is also zero, right? This is provided in the question. Cost of goods manufactured, एक second. मेरा यहाँ पे आ गया था ना, cost of goods manufactured was how much? We calculated that.
12,200.
Are you sure?
Yes.
Yeah, it is given.
12,200. Yeah.
We got 12,200 as my cost of goods that have
Cost
been
of goods.
manufactured during the year. Now I have about 5,700
700.
material used. Can I not do reverse calculation and calculate this? 12,200 minus, this is already zero.
Minus
This is
direct
already
labor
zero.
and factory
So
overheads.
minus 5,700, how much do I get?
6,500.
This is the ask. This is nothing but my conversion cost. This will not go more complex than this. They cannot ask you more complex than this question. If you have
Right.
understood this, the 3 steps that are involved, you are done. Okay. So always remember, raw material consumed, you should know how to calculate. Raw material consumed is opening raw material, add
Purchase.
purchases, less
Closing.
raw material. What you get is raw material
Consumed.
used or consumed during the period.
During the period.
Use this number, put it here to calculate the cost of goods that is manufactured during
Manufactured
the period.
during the year.
You have opening WIP.
WIP.
You add to this your raw material use, your direct labor,
Factory overheads.
your factory overheads. What you finally get is the goods that have been manufactured, but it also includes your
Minus
goods that are not
closing.
100% complete.
Right.
So
Minus
less your closing WIP.
WIP.
Once you reduce your WIP, now you have the final cost of goods that are
Manufactured.
manufactured and have been transferred to the godown for disposal.
Yes.
Then the third part of it will be calculation of cost of goods sold. Goods sold का मतलब है कि goods are already available with me from the previous period. I was not
Right.
able to sell them. They are lying as my opening finished stock.
Finished goods.
Add what has been produced during the period. So cost of goods manufactured during the period. Okay. So now I have how many boxes available for sale? I had 7 boxes available
7.
for sale. Okay. I was able to sell few and the rest, sorry, I'm not able to write here. So the closing finished goods are reduced from this. Finally, cost of goods sold is the total number of boxes that you have sold. In our example, 5 boxes were sold finally.
Sold during the year. Yes.
This is called as prime cost. So instead of conversion, they can ask you a question on prime cost. This plus this is called as conversion cost. Practice this. I think the fundamental is clear. Sandhya, have you understood?
Yes, ma'am.
Payal, clear?
Yes, ma'am.
Dear friend Lohit,
Yes, ma'am.
Pakka.
Yes, ma'am.
Chalo, kal subah let's have a meeting. What
Sure.
time? नहीं, कल सुबह नहीं. I think I also need rest. Tuesday morning. Let's meet at what time? 11?
Yeah, ma'am. Yeah.
Okay. So I'll see you at 11 Tuesday morning. And the rest of you, please block my calendar whenever you need me. Let me know, okay? Please go through these questions.
Okay.
Extremely, extremely important questions for your exam standpoint. ठीक है?
Okay.
Task-based simulations हैं ये completely. After this, we will have a discontinued operation. See, all of this is taking a lot of time, but I'm hoping that going forward, we will be able to speed up once the concepts are in place. Because this I'm teaching some part of your management accounting also, but they test you on these concepts.
Mhm.
Okay. So basically what I'm trying to do, that everything that Becker has covered in its material, everything that Glenn has covered in its material, and AICPA, whatever questions that they have asked in the past, I'm trying to cover up all the content so that nothing is left. At least from our side, we should be able to cover. But with this, we will be able to cover the entire syllabus in 3.5 to 4 months for sure. I think 3.5 months we will be able to complete. Okay. Now let me know tomorrow or today if you want to, the timings that you all prefer. So let's break our classes into so Saturday and Sunday. Okay. So Sanjay and Indu, for you, I understand either it is late night or it is very early morning. So please let us know the time preferred. Okay. And because Sandhya has her office on Saturday, she's not able to attend. So let's all try to help other participants so that they are able to attend maximum classes with maximum efficiency.
Yeah.
Okay.
I'm okay for this time.
Yeah. So please let me know whatever is your preferred time. I don't want my participants' head going round and round. Okay. Sanjay, I'm extremely sorry, dear.
No issues.
No, I'm really sorry. What do I do?
No.
See, it is a commitment, it is a journey together, but you will get fruits for it, I'm sure. And because you are sitting in US, definitely it will be extremely helpful.
Yeah.
Okay. So all the participants, the international participants, have a very good day. And my India participants have a very good night. Please take care, keep studying, and please, team leaders, take care of your teams. Help them out wherever they need. You are the team leader for this week. Next week, somebody else is going to guide you, is going to help you. Okay? So I hope this session was useful and most of this you have understood. In case there are any doubts left, please write to me. Okay? And we will have separate one-on-one session during the week.
Thank
Okay?
you.
Thank you.
Okay.
Thank you.
Okay.
Thank
Bye-bye,
you.
Sanjay. Please take care. Okay?
Yeah. Bye. Bye.
All right. Bye.
Bye.
Bye. Thank you, ma'am. Good night, ma'am.
Bye-bye. Good night.